There's a resistance at this point to really add a lot of risk.
We've seen some very unusual correlation moves, and I think that it's sometimes hard to figure out exactly why that is.
There's just the opportunity here to be a little bit cautious and you're not taking undue risk.
People still have very little appetite, but this is a well-told story. People are a little bit too bearish.
The single thing that investors are looking for right now, if I picked one out, it's certainty.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. Coming into Friday, Israel strikes Iran.
Israel will never allow those who call for our annihilation to develop the means to achieve that goal. Tonight, Israel backs those words with action. We struck at the heart of Iran's nuclear enrichment program. We struck at the heart of Iran's nuclear weaponization program.
Israel striking Iranian nuclear facilities, killing senior military commanders. Iran vowing Israel will pay a heavy price, promising a severe response. A major escalation sending crude higher and driving stock markets much lower as tensions rise across the Middle East.
So this just opens up, Jonathan, to a wider war potentially in the Middle East, heightened escalation. Israel launched airstrikes on not just the nuclear facilities, also aiming to go after the ballistic missile programs, but also going after the top brass of their forces. We are talking about the Islamic Revolutionary Guard Corps commander being killed, as also other top scientists. The United States response last night from Secretary Rubio was that they were aware, but they do not want to be involved in this, and they do not want Iran to target U.S. military personnel.
A response from the president just moments ago. The president of the United States, Donald Trump, saying Iran must make a deal before there is nothing left and save what was once known as the Iranian Empire. No more death, no more destruction. Just do it before it's too late.
So the president had always said he wants to use the diplomatic route first. He even said that as recent as this week. They are supposed to have a sixth round of talks on Sunday. Iranian state TV said that those talks are going to be canceled in Oman. It's obvious what you have right now is a retaliation from Iran, sending over 100 drones to Israel. A key question, if the U.S. is not part of this attack on Iran, is it going to be part of the defense of Israel?
A lot to think about in financial markets. Equities lower. Crude is a whole lot higher. We go from the 60s to the 70s. WTI up by more than 8% this morning. Similar move on Brent. Brent crude at 75. WTI just south of 74. This is a well-supplied oil market. That's the good news. What's the bad news?
This region accounts for a third of global oil production. And what happens now is that you will have Iran come out and threaten that they will close Hormuz. And this is where not just Iran ships barrels to the likes of China, but also Saudi Arabia, the United Arab Emirates, Iraq. They all send many of their energy exports through this waterway. What we should note is that earlier in the week, J.P. Morgan said prices could reach, Jonathan, $130 a barrel in the worst case scenario. This is looking like the start of a potential broader escalation and maybe a worst case scenario.
75 on Brent crude this morning. Much more on the market in just a moment. Coming up this hour, we'll catch up with Max Kettner of HSBC as tensions rise across the Middle East. We'll speak to Stephen Cook of CFR as Israel attacks Iran's nuclear sites, and Robert Tipp of PGIM on the flight to safety. We begin this hour with our top story, a major escalation as Israel launches airstrikes targeting Iran's nuclear facilities. Our team coverage begins right now with Bloomberg's Tyler Kendall in Washington, D.C. and Jumana Basechi in London. Jumana, I want to come to you first. The Israeli goals, are they targeted, are they limited, and to what extent were they achieved overnight?
I think that's the fundamental question there, John. What is the goal? What was the objective? If you listen to the comments that the Israeli Prime Minister Benjamin Netanyahu gave after the attacks, he said that they're not going to stop until they are sure that Iran cannot develop a nuclear bomb. And of course, we know that Iran has enriched hundreds of kilos of uranium very close to levels of atomic weapon grade. And so on the back of that, Israel have said that they will continue to strike until they're sure that they have fully dismantled their capabilities. So what did they do yesterday? They launched an unprecedented wave of attacks across various nuclear facilities within Iran. But just a couple of hours ago, the IAEA put out a report saying they're not detecting nuclear radiation from two of those most significant sites, i.e. those main nuclear enrichment facilities where a lot of the stockpiles sit have not been damaged. And that is because they're deeply embedded into the mountain. They're very much buttressed, which is why we will likely see more attacks of this future, unless, of course, there is a change of tone coming from Iran and they show more appetite to engage in these talks and to commit to no enrichment, which is what Israel and to a certain extent the U.S. have been pushing for. So has the Israeli attacks been successful overnight in terms of dismantling these nuclear facilities? No. Has it sustained a huge blow to the Iranian system? Yes. They took out a senior IRGC commander. They took out the head of the armed forces. They took out a senior advisor to the Ayatollah, 25 nuclear scientists. And once again, Iran are on the back foot. Israeli media once also reporting that there was a covert intelligence operation that also took place simultaneously, whereby Mossad agents were actually deployed into the country as well. So yet another blow to the Iranian intelligence. How they respond here is going to be key. But they also know that if you go on the template of what happened last year, that Israel has a very efficient ability to deflect the ballistic missiles and the drones that Iran tend to send towards the country. And so from that perspective, they're limited. Their commanders obviously taken out, and then their proxies around the region weakened as well. I'm just hearing reports now, according to Lebanese media, that Hezbollah are saying that they aren't likely to be wading into the war and to launch an attack on Israel unilaterally. So that's something significant to consider as well in the context of whether this could become a broader regional conflict.
Tyler, to build on some of that, we need to think about the US role in all of this. This is what we know so far. We've been told they weren't involved in the attack. Do we know to what extent they played a role in the defense?
Yeah, well, hey, John, good morning. The U.S. tried to swiftly distance itself from this operation. You had Secretary of State Marco Rubio really coming out saying that the U.S. is not involved and that their top priority is protecting U.S. troops in the region. But now you have President Trump in this post on Truth Social just moments ago appearing to use this as leverage as these talks continue when it comes to Iran's nuclear capability, saying in this post, quote, Iran must make a deal before there is nothing left. Now, I was at the White House on Monday, where President Trump did confirm that he had a phone call with Israeli Prime Minister Benjamin Netanyahu. And it does appear, it is our understanding, that these leaders have spoken multiple times in recent days. But the action does come in apparent defiance of President Trump, who told reporters yesterday at the White House that he did not want Israel to ultimately do this strike because he did not want it to derail these talks. John, we should also note that we are hearing from the U.S. Congress. While Republicans have largely defended Israel and this airstrike, they are saying that they want to see a diplomatic de-escalation ahead. Senate Majority Leader John Thune saying that the top interest, of course, is protecting U.S. forces on the ground.
Tyler, Jamala, to both of you, thank you. We'll catch up with you in the next hour, no doubt. And any updates this morning, they'll be bringing them to you throughout this hour. Throughout this hour, we need to be thinking about the Iranian response. This is important now, Annmarie, because Iran has threatened not just Israel, but U.S. assets as well, at a time when the United States is saying they had limited involvement. So let's think about the character of a potential Iranian response and build on some of the words from Jamala there. The degraded capabilities of Iranian proxies and the expected character of Iran's response here. What do we know?
Well, also, the fact of the matter is, if Israel is using any sort of even intelligence, or if the United States is helping it refuel, will Iran use that and say that the United States is still helping Israel and could be still part of the attack? It is why we saw this week, leading up to this attack, the United States taking out some personnel in the region, specifically as well from Iraq. So you wake up with a ton of questions. If Iran is going to respond, is it going to be proportional to what the Israelis had? And to what extent is the U.S. willing to step in to protect the Israelis and other assets in the region?
If you are just joining us, welcome to the programme. Equity futures at the moment down by 1.2% on the S&P 500. Big rally in crude, anywhere between 7 to 8% through much of the last few hours. Here's the view on Wall Street this morning. Max Kettner of HSBC joins us now for more. Max, we've always got to think about, does this upend the economic picture? Does it upend the economic picture at a time when I started to read note after note talking up the prospect of Goldilocks, a Goldilocks economy? What's your response this morning, Max?
Yeah, good morning, John. I don't think it does actually change the overall picture an awful lot, because what we've done previously is we looked at some point the biggest geopolitical events that we had over the last 25 years. And what you're seeing is typically the reaction from not only risk assets, but from treasuries, from gold, so really across the asset classes. And we're not talking the post-reaction after such geopolitical events, let's say a month or 3 months out. We're literally even talking already the day after. You're more likely going to see people fade those geopolitical risk events rather than double down on them. So it is more likely that already perhaps on Monday, we're going to start to see actually people saying, you know what, yes, it's not great. And yes, it is does have some repercussions for oil prices. But overall, does it really change the earnings outlook? Does it change the really low positioning that you guys were bringing up at the very, very beginning of this program, where people really are still pretty depressed, not only in terms of sentiment, in terms of positioning, but also in terms of earnings expectations for the second quarter, in terms of expectations also for GDP, how that's been slashed massively in the last 2-3 months for the US. None of these things are going to be changed now by this one event, I think.
Max, let's go through asset class by asset class. So equities this morning down by more than 1%. Crude rallying, as you pointed out, up by more than 9% now on WTI crude. I want to spend some time in fixed income in the bond market. So waking up this morning and seeing the 10-year yield lower by not even a basis point. Now, Max, I want to understand from your point of view, your opinion, whether that tells you something about the risk or whether it actually tells you something about the Treasury market.
No, it does tell you about the risk because, of course, on the one hand, you could argue, yes, that is risk off. Let's buy duration. On the other hand, you can argue, well, oil up, that means break evens up, means it's actually inflationary if, of course, oil prices do sustain those gains, which I am skeptical about because, let's face it, also the supply glut is here to stay for the next couple of quarters. So overall, I think it's a pretty rational reaction to see treasuries roughly trade flat because on the one hand, you've got the risk off thing. On the other hand, you've got the potential inflationary impact from higher oil prices. And that, of course, is sort of balancing each other out. And therefore, treasuries rates in this instance, not only actually in this instance, but even in this environment where we're continuing to play these fears around stagflation in the next couple of months, perhaps away from what's been happening overnight, but perhaps goods inflation really starting to pick up still in the next couple of months. We've not seen it on Wednesday, but perhaps it comes in June or July and August. This underlying threat is still there. The underlying threat around debt sustainability, around fiscal sustainability, that's still there. And all of that puts a dent into the risk-off characteristics or the hedging properties of treasuries. And it makes us favor gold as our preferred safe haven, much more than sovereign bonds at this point.
Max, when it comes to oil, you don't think that these gains could be sustained. JP Morgan's talking about potentially as high as $130 a barrel. How high do you think we could get, though? And you see this tit-for-tat escalation that is likely to continue.
I think, look, going back to what I said in the beginning, that actually what we see across the asset classes in this geopolitical events, and a lot of those geopolitical events in the last 25 years have been driven or have had some effect also on oil prices. Now, incidentally, what we're seeing is that particularly also in oil prices, not only in equities or credit spreads or yields, but particularly also in oil prices, we're starting to see even one day after those events, those gains in oil prices starting to fade. So I would say, look, fundamentally, has really so much changed? Yeah, well, I get it, right? That you guys were talking about, potential trade routes being rerouted and the Iranian oil exports perhaps being impacted. But in terms of the supply glut, in terms of perhaps OPEC Plus continuing to add supply even further in the next couple of meetings, none of that has changed. So I don't think those levels where we are right now are really sustained and are justified. So in our asset allocation, we almost hold no oil in our tactical view, so still very underweight.
Would you change your mind if they closed Hormuz?
No, I don't think so. I think because in that instance also, we've got to figure out, okay, if they closed it, is that going to be sustained or is that another negotiation tactic, which perhaps after a couple of days is going to be reversed again? It's so fluid that, to base a position on that is pretty tricky. I think particularly if they did do that, I think what you would see is you'd see another initial spike in oil prices, and then it'd be too late to change anyway. It's a bit related to the lower sensitivity that markets are showing right now to tariffs as well, because what we've seen, even with the EU, with the steel tariffs, markets and equities haven't reacted to that because people have and investors have really learned that, you know what, we're already late in selling. We don't know when or if Trump will turn around and will reveal that it's just a negotiation tactic. So most likely we're going to be late in buying as well. So therefore, the rational reaction is not doing anything, and that drags down the sensitivity to tariffs. And I do think with oil prices, that's probably going to be pretty similar.
And Max, there's a quote on Wall Street that I absolutely love. It's that you can only bet on the end of the world once. If you were to pick up the pieces this morning, looking at this equity market move, what pieces would you pick up?
Yeah, this is for me. I mean, this is exactly the kind of opportunities that you want to buy. What is remarkable to me, we've had this 20% plus rally in equity markets, particularly in the US, and we're still talking about all this bearish stuff. Look at the last 3 weeks. We're talking about European Union tariffs, steel tariffs, Moody's downgrade, Section 899. So one bearish catalyst after the other. If you wanted to explain to, let's say, to some student or summer intern, what's this wall of worry that everyone's talking about? This is precisely it. This is the textbook definition of wall of worries that we're climbing now. And I do think what people really underestimate is the potential for, particularly in the US, positive earnings surprises, particularly in the Q2 earnings season in the US, and really in those stocks that benefit from the weaker dollar, which incidentally are the tech stocks, are the behemoths, are the Magnificent Seven. What you want to pick up is really those stocks now in the US that are going to benefit from the weaker dollar, tech stocks in particular, and the Magnificent Seven.
Max, appreciate your time. As always, sir, Max Kettner there of HSBC. On financial markets, crude this morning up by close to 9% now. 74 on WTI. Brent crude at the moment, 75.29. Let's get you an update on stories worldwide with your Bloomberg brief. Here's Yahara Anand. Hey, Yahara.
Hi, John. We start with today's top story. Israel launched airstrikes across Iran, targeting nuclear facilities and killing senior military commanders. Israeli Prime Minister Benjamin Netanyahu said the attacks, quote, will continue for as many days as it takes to remove this threat. The move is sparking concerns of a broader war in the Middle East, with Iran vowing to retaliate. Meanwhile, Air India confirmed all but one passenger on board the Boeing Dreamliner that crashed yesterday have died. The survivor said he walked out of a broken emergency exit. Investigators are still searching the wreckage for clues on what caused the crash. The Hindustan Times reporting one of the black boxes has been recovered. And the Trump administration winning a brief reprieve from a judge's order to pull back its use of troops in Los Angeles. Protesters against deportation raids have clashed with law enforcement in downtown LA for days, with Governor Gavin Newsom and President Trump at odds over how to restore order. Another hearing on the case has been scheduled for Tuesday. That's your Bloomberg brief. John?
Yahara, thank you. Appreciate it. More from Yahara later in the hour. Up next on the program, Israel strikes Iran.
I've made it clear time and again, Israel will never allow those who call for our annihilation to develop the means to achieve that goal. We struck at the heart of Iran's nuclear enrichment program. We struck at the heart of Iran's nuclear weaponization program.
Up next, we'll catch up with John Lieber of Eurasia Group, live from New York City this morning. Good morning. Kicking off Friday morning with some risk aversion sparked by this move right here. Crude at the moment rallying hard by 9%. This time last week we closed at 64. This morning 74. 74.30 on WTI, 75.60 on Brent crude. In the equity market, we're heading lower. We're down on the S&P 500 by more than 1%, down by 1.6 on the Russell 2000. Under surveillance this morning, Israel strikes Iran.
I've made it clear time and again, Israel will never allow those who call for our annihilation to develop the means to achieve that goal. We struck at the heart of Iran's nuclear enrichment program. We struck at the heart of Iran's nuclear weaponization program. We targeted Iran's main enrichment facility in Natanz. We targeted Iran's leading nuclear scientists working on the Iranian bomb. We also struck at the heart of Iran's ballistic missile program.
It's the latest this morning. Israel launching a major operation against Iran, killing senior military commanders. In retaliation, Iran targeting Israel with drones. The US saying it was not involved in Israel's attacks. Joining us now is John Lieber of Eurasia Group. John, welcome to the programme, sir. I think a big question for the US at the moment, just how much influence does this country have, does this White House have over Israel?
Well, it looks in this case like the Israelis did this attack on their own, if you believe what we've heard from the White House and what the White House has been saying publicly. I think Israel saw the time as now. And if anything, the progress that the Trump administration was making on the nuclear negotiations with Iran was one of the reasons that they attacked now. is because they were concerned about the Americans cutting a deal with the Iranians that would be unacceptable to Israel. They most likely informed the Americans of the attack in advance, and the Americans didn't say no. And I think if you look at Trump's statements this morning, it looks like he's trying to leverage this for greater power in those negotiations with Iran.
John, the fact that the Americans did not say no, does that mean that they essentially gave a green light to what we saw happen overnight?
Well, we've been calling this an orange light, where this isn't exactly a green light. It's not exactly a red light, but they've been in a situation where the Israelis were eager to attack. And allegedly the attack order came earlier this week, even before the vote in Israel. And the Americans could have put more pressure on them to stop them, but probably did not. And this, I think, suggests, again, going back to this point about the negotiations, trying to pressure the Iranians and put a lot more leverage on them to say that they really have no choice but to cut a deal with the United States on terms that are presumably, at least in the Trump administration's eyes, going to be more favorable to the U.S. after this attack than before.
Whether it's a green light or an orange light, does Tehran see a difference?
I'm not sure Tehran has the ability to do anything about it. I mean, certainly Israel is quite vulnerable right now. I thought the Marco Rubio statement last night was that the Iranians should not retaliate against any U.S. assets. They didn't say anything about Israeli assets, was very telling. And, I think the U.S. sees this as a conflict between Israel and Iran, and Israel wanted to do this attack. But I don't know if Iran has the power to strike anywhere that's going to hurt the U.S. other than what you were talking about with your previous guest, which is, of course, oil prices, which are obviously up on this risk.
The U.S. says it wasn't involved in helping Israel with this attack. Will it be involved in helping Israel with its defense? We already know that Iran is sending over some 100 drones, and potentially we could see ballistic missiles as we did in April of last year.
Yeah, we don't know yet. I mean, the U.S. was key to defending the Israelis during that salvo of missiles that Iran sent over in April. U.S. assets had not been repositioned in the region in order to help with that kind of defense. So it doesn't look like there's anything extraordinary the U.S. is capable of doing right now. The U.S. did evacuate earlier this week a number of their families and personnel from bases in the region. I think it's very hard to see the U.S. walking away from Israel if the Iranians are mounting a massive counterattack that threatens it. But on the other hand, the Israeli promise to allow this to go for several days is a clear indication that they're now going after not only Iranian ballistic missile facilities, nuclear facilities, but they also want to go after their ability to strike Israel. And so I think that alone could also end up crippling Iran's ability to launch weaponry into Israel.
Iranian state TV said that the talks, or that they were going to send a representative to the talks in Oman on Sunday, are off. Where does this leave Tehran and Washington in terms of potential negotiations for a nuclear deal?
Yeah, the U.S. this morning said that they were planning to still do it, but it does seem very unlikely that you can continue these talks under these circumstances. I mean, what's happening inside Iran, I think that once the dust clears, this could be a fairly large shakeup of their military command, with their top leaders being killed. And it's possible that the Israelis are trying to strike at their political command as well. So I think it's difficult to forecast beyond the next several days because this offensive is not over yet. And but once that happens, it's going to be a while before you get these talks rebooted and get the Iranians fully engaged again.
Hey, John, appreciate your reaction this morning. Thank you, sir. John Lieber there of Eurasia Group. Following this attack, crude is higher now by more than 9%, 74.31. I think the key line there at the very end. This offence isn't over yet. No indication that this mission, this operation, is complete.
No indication. Already know that Iran is vowing to retaliate, and they already sent over drones to Israel that they were able to shoot down. Also, we saw Jordanian airspace intercept some drones. So what you see now is potentially that this is not just going to be an escalation between Iran and Israel. Other neighboring countries potentially, not because they want to, may end up being involved and are going to defend their airspace. This just shows that this is going to be days of escalation, which is why you see this geopolitical risk premium in the oil price.
You asked the perfect question. The U.S. didn't say yes. The U.S. didn't say no. Will Iran identify any difference between the two?
I believe Tehran will view that as tactically the United States saying yes, because they knew this was going to happen and they didn't stop it.
Up next on the programme, we'll catch up with Stephen Cook of CFR following Israel's attacks on Iran. Live from New York City this morning, you're watching Bloomberg TV. Live from New York City this morning. Good morning. Here's a flavour of the price action for you. Cross-asset equities heading lower. We're moving south. We're down by more than 1% on the S&P, negative by 1.4 on the Nasdaq. In the bond market, check this out. Yields across the curve bleeding just a little bit higher now by a single basis point, 437 on 10s. Think of this as a three-way tug of war. Risk aversion versus inflationary developments versus doubts about haven status of the Treasury market altogether. I don't know what to do with this Treasury market, and maybe that's the problem. In the commodity market, here's the inflationary development. WTI and Brent rallying hard, up by 9% on WTI, 74.13 on Brent crude, up by more than 8%, 75.35. That's the cross-asset price action. Let's get you some morning movers with a few hours until the opening bell. It's Danny Berger with more. Hey, Danny.
John, just considering that energy board you just showed, it will be no surprise what is moving the most to the upside in the pre-market session this morning, and that is the big energy players, easily the best performing stocks in the S&P 500 pre-market. You're looking at ConocoPhillips up 5%, Exxon up more than 3.5%, Chevron just under 3.5%. It's been a good week for the energy players, too. They had already been rallying on hopes of better economic growth, given some of the data, so that rally really picks up speed with the latest conflict in the Middle East. Another play that typically develops when you see this geopolitical angst are defense and military type companies outperforming. And again, that is what we're seeing. RTX up 5.5%. Lockheed Martin up 4.6%. With that playbook and also Iran vowing retaliation on the U.S. included. Now to the downside, airlines being hit hard on the latest developments. All the majors falling this morning, at least some 4%. A couple things going on here. A lot of Middle East nations have closed their airspace. Perhaps that affects airlines more concentrated in the Middle East and Asia. But for these majors in the U.S., perhaps the concern is higher fuel costs off the back of that oil move, John.
Danny, thank you. Appreciate the update. More from Danny in the next hour. Some of the movers out there at the moment. On our radar this morning, our top story worldwide. Israel launching airstrikes across Iran, targeting nuclear facilities and killing senior military commanders. The move sparking concerns of a broader war in the Middle East, with Iran vowing to retaliate. Here's the U.S. response this morning. President Donald Trump saying Iran must make a deal before it's too late. The president posting on Truth Social after Israel's attack on Iran, saying he gave Iran chance after chance to make a deal, and they couldn't get it done.
He also gave Iran a timeline about 2 months ago, and this was going to be the 6th round of talks between envoy Steve Witkoff and the Iranians in Oman on Sunday. Iranian state TV has said that these talks are now over. The president is still trying to have a diplomatic path. Very challenging right now, given the fact that what you've seen from Israel overnight is, Jonathan, not just going after nuclear facilities, not just going after Iran's ballistic missile program, but going after top brass of the military. We are talking about the commander of the IRGC. This might be one of the most important people when it comes to the regime's military operation, a close advisor of the Ayatollah. Iran is very vulnerable right now when it comes to their senior military and also their intel collection, and how they're going to respond is going to be also challenging for them, given the fact that a number of commanders are killed.
We'll come back to this story in just a moment. I just want to bring you developments elsewhere on the tragic incident that took place yesterday morning. Air India confirming that all but one passenger on board the Boeing Dreamliner that crashed yesterday died. Investigators searching the wreckage for clues on what caused the crash. The Hindustan Times reporting one of the black boxes has been recovered.
So when you listen to this man talk about what he experienced, who was able to walk away from this devastating, horrific crash, I think we should listen to some of his words. He said he was stuck for 5 to 10 seconds. He saw these lights. It seemed like it was pushing harder to take off. On the side I was on, that part of the plane didn't crash into the hostel. It landed on the ground floor. When the door on my side broke, I saw an opportunity to escape, so I got out. My left hand got burned when the fire started, but I was able to make it out. This is unbelievable.
Stunning.
This one individual was able to walk away from this crash. Absolutely tragic. We do know that the prime minister is meeting at that airport now with his top officials, and this is just devastating for the entire country.
Absolutely devastating. We'll have more updates for you from Yahara throughout the next couple of hours or so. Let's turn back to our top story for financial markets worldwide. Oil rising after Israel struck Iranian nuclear facilities. Iran vowing Israel will pay a heavy price, promising a severe response. Joining us now in the commodity market, Bloomberg's Will Kennedy. Will, welcome to the programme, sir. Big rally this morning, up by anywhere between 8 to 9% over the last 30 minutes or so. Let's just start with the supply backdrop for this market, Will. Just how well supplied is the crude market currently?
It is fairly well supplied. We've seen OPEC put more oil into the market this year, a succession of increases of the 400,000 barrels a day. That was faster than people expected, but demand has been relatively strong as well. It's seen to be able to take that supply and trade in the 60s, but clearly this has changed completely the risk premium that people see in the market, and traders are now thinking about what's next and some of the scenarios for Iranian response.
Well, when it comes to Iranian response, Will, they've always threatened to close Hormuz, but they never actually do. Do you think that's on the table this time around?
It would be a dramatic escalation, but it's possible that they may decide a dramatic escalation is required. I think there are two reasons to be cautious on that. One, it would almost certainly drag the US military into the conflict, because I think the US has always made clear that it sees that keeping those straits navigable is a key goal for US foreign policy. And it would also antagonize China, who needs the oil to keep flowing out of the Gulf. So there are reasons to be cautious on that scenario, but there are intermediate scenarios where Iran decides to harass shipping in and out of the Persian Gulf. We see a quarter of oil exports globally go through that narrow waterway, and that's a playbook that their Houthi allies in the Red Sea have used in recent months and years, and that would force up prices, raise the stake for the global economy, without that extreme scenario that may draw the US into the conflict. So it's definitely something to watch, but I don't think we should see it as a binary, closed, open thing. There are intermediate scenarios which oil traders will be very focused on.
Well, for the oil market then, is it more important to watch the proxies like the Houthis, and is it actually to watch the regime?
I think both. I think that we could see the regime act in the Persian Gulf. They have naval assets there. They could start seizing tankers, attacking tankers, raising the cost of tankers, forcing tanker owners to wonder whether they want to take their ships into the Gulf, and that would have severe disruptions to oil and shipping markets. I certainly think that's a possibility. We have seen other periods where the navies have had to escort ships in and out of the Persian Gulf. That's perhaps something that we should be thinking about. But I think the other thing that may keep a lid on prices is that clearly, despite recent OPEC increases in production, both the Saudis and the Emiratis have the ability to put many hundreds of thousands, if not millions of barrels of extra oil back into the market if we get an extreme disruption. And they also have the ability to supply some of that oil through routes that don't go through Hormuz, through the Indian Ocean in the case of the UAE, and through the Red Sea in the case of the Saudis.
Big rally this morning, crude high by anywhere between 8 to 9%. Will, thank you, sir. Will Kennedy there of Bloomberg. Happy to lead our coverage. Over in London, I want to get you an update from the IDF, dropping just moments ago, saying the IRGC Air Force commander was killed in a bunker strike. The latest update from the Israeli Defense Force.
So this is just yet another top individual when it comes to the regime's military forces that was killed. And I think actually this is the most significant piece of information we have overnight. Because when it comes to the nuclear facility, so far the IAEA is saying that maybe they weren't able to penetrate so much into the nuclear facilities. What Israel was able to penetrate and show the vulnerability of the regime is taking out top brass individuals. And this is a very closed circuit of individuals who are close to the Ayatollah. And we just keep seeing reports of more of these people that are now reportedly dead. The IRGC commander, the military chief of staff for that, and also, Jonathan, a number of top scientists that are working on this nuclear program.
I need to spend some time on the potential Iranian response. We can do that now with Stephen Cook, the Senior Fellow for Middle East and Africa Studies at the Council on Foreign Relations. Stephen, welcome to the programme, sir. What a timely opportunity to catch up with you. Stephen, can we start with Iranian defence and military capabilities, how degraded they've been, how degraded they've become, and not just theirs, but also the military capabilities of Iranian proxies as well. What is the current state of play?
Yeah, well, reporting coming out of Iran and Israeli reporting indicates that a tremendous amount of damage has been done to Iran's ability to respond. There are reports of James Bond-like Mossad operations in which they have disabled the ability of the Iranians to launch large numbers of ballistic missiles towards Israel, that they have targeted Iran's air defenses so that Iran is more vulnerable than ever. Thus far, the only thing that the Iranians have been able to muster are a wave of UAV strikes, most of which I believe have been shot down. As far as the proxies go, Hezbollah has said it will not respond to Israel's attacks on Iran. And in fact, the Lebanese government has said it will make sure that Hezbollah does not respond to Israel's attacks on Iran. We haven't yet heard from the Iraqi militias, but in the past, specifically last October, when the Israelis hit Iran previously, the Iraqi militias have said that they weren't interested in retaliation. That leaves the Houthis, and we'll have to see how they respond. But by early accounts, the Israelis have done a very significant amount of damage to Iran's ability to strike effectively. Of course, it's early days. The Iranians may have some tricks up their sleeves, but right now, all the advantage goes to the Israelis, who are once again undertaking attacks against Iran.
Stephen, if it's true that the U.S. and Israel have a tight security relationship, why would Israel choose to act and the United States not?
Well, we don't know for sure whether the United States was not in on this. There is a lot of Israeli reporting suggesting that this was in the last few days were an elaborate deception campaign. But I think in keeping with the president's worldview, Defense Secretary Pete Hegseth said it best before Congress just the other day, in which he said that Prime Minister Netanyahu is going to do what's best for his country and President Trump's going to do what's best for the United States. I think the Israelis' view is that the Iranians in recent weeks have crossed a certain threshold and that they just could not wait. There is a fair amount of Israel-U.S. security coordination, and as these attacks are unfolding, it's likely that the United States provided real-time intelligence to the Israelis. And of course, in retaliation, because Israel is part of CENTCOM, the United States and Israel and other regional partners will cooperate in defense of Israel as a result of that. But it remains to be seen. I think the president's posts on social media this morning would suggest he'd like to have it both ways. And maybe when you're the president of the United States, you get to have it both ways. But I think more needs to be, we need to find out more about the actual U.S. role here.
You just insinuated that you don't think this would hinder the U.S. response in defending Israel. So do you expect the U.S. to come out in full force in Israeli defense when we see Iran's retaliation?
We already see in the CENTCOM area of operations, the Jordanian Air Force is shooting down Iranian drones. And that is in coordination with the United States. So, yes, I do think that the United States will help in the defense of Israel in the event of a kind of massive Iranian response. And I do think that the United States would get involved if the Iranians seek to respond by, for example, closing the Strait of Hormuz or attacking shipping in the Persian Gulf.
We've been talking about for months, actually years, about Iranian enrichment and these breakout periods. Why now, Stephen?
Well, I think the Iranians have been working diligently at this and that their security situation has deteriorated over the course of recent months. I think we should be skeptical about the reports over these many years that Iran was not seeking to weaponize its program and has been diligently working throughout in order to develop a weapons capability. I was privy to an open source briefing just recently, which made it clear that the Iranians really have never stopped their efforts to develop nuclear weapons.
So do you think today's attack was all about where they are in terms of their capability when it comes to their nuclear program? Or is there something else Israel knows that we have yet to be briefed on?
Well, I think for the Israelis, a certain threshold had been breached, and they felt that they did not have much time left before the Iranians weaponized. But I think that there's a broader goal here for the Israelis. The way this attack is unfolding is quite similar to what the Israelis did to Hezbollah in the fall of 2024, essentially an effort to decapitate the regime, make it render its ability to respond effectively quite weak, and provide an opportunity for a change in regime. It is the Iranian regime that is the danger, not necessarily Iran or the Iranian military, or even the Iran nuclear program. It is the regime and what their intentions are to do with it. If you change the regime, you provide an opportunity for perhaps a more benign government there. An opportunity. It's a very, very risky strategy, but it seems clear based on how the Israelis have attacked the IRGC leadership, the military leadership, and he even reportedly took a shot at the supreme leader himself.
Stephen, I want to follow up on this. What you're saying is really quite important, because what I've heard so far this morning is something quite different, that this was a targeted, limited operation, to degrade the military and nuclear capabilities of this country, and that regime change was something bigger, something that they weren't pursuing. If the Iranian regime believes that the Israelis are looking to topple the regime and they view this as the start of an existential threat, how does that shape their response in the coming weeks and months? Because I can tell you from a financial market perspective, a lot of people are thinking about the Strait of Hormuz, and some people would sit here and say, that's the big card, the nuclear option. They wouldn't reach for that. Maybe they look to de-escalate things from here. Are you saying this could play out differently?
Oh, I certainly think that that's the case, and I think that people are missing the point here. Prime Minister Benjamin Netanyahu has for months been talking about the Iranian people, how the Iranian people are suffering under this regime, that a different regime would be better for the Iranian people. And so I think that there is absolutely a broader goal that is here. The Israelis promised, Prime Minister Netanyahu himself promised on October 9th, 2023, to change the Middle East. That doesn't entail limited operations just against nuclear programs. Now, as I said, it's a risky strategy. The Israelis are far away. They are looking to greatly weaken this regime so that it can be more easily toppled. It's not a coincidence, I don't think, that the Israelis called their operation Rising Lion. Take a look at the Shah's regime. Take a look at their flag. There's a lion in the middle of it. So I do think that it may be existential for the Iranians and that they may try to retaliate in very, very significant ways. I think the question is, how much damage has the Israeli military done in last night's wave of attacks that are being undertaken now, waves of attacks that are being contemplated in the coming days, how much damage they've done to the Iranian ability to respond, and whether the Iranians, after all this, will be able to muster the kind of massive response against Israel or American bases around the region. They'll still have a lot of resources at their disposal. Certainly the ability to create chaos in other parts of the region. But will it be this kind of existential regional war that people have been warning about? So far, it doesn't look like it, with Hezbollah saying, we're not involved, quiet from the Iraqi militias. That may unfold in coming days, but the Israelis seem intent on not allowing that to happen.
Deeply thoughtful stuff. Stephen, appreciate your time, sir. Stephen Cook there of the Council on Foreign Relations. It's quite a take there at the end.
It's a little bit different than what everyone is saying, is that they just want to put a blunt and really stop Iran from having this nuclear program. What he is talking about is getting at the heart of actually what we've seen in terms of Israel targeting top military brass, not just the Islamic Revolutionary Guard commander, but also the IDF in the past 20 minutes, talking about the IRGC's Air Force commander. We are talking about top military officials close to the Ayatollah. Stephen Cook there said they also, Jonathan, took a shot potentially at the Ayatollah. This is regime change potentially.
Crude this morning higher by close to 9% now. WTI crude, we're up to 73.96. With an update on all of these stories worldwide, put it together in your Bloomberg brief. Here's Yahara Arnott. Hey, Yahara.
Hi, John. Israel launching another round of attacks on several locations in Iran, including the Natanz nuclear site. The Tasnim news agency reporting the city's airport was under, quote, heavy attack earlier. Iran also vowing lethal retaliation in response to a wave of Israeli airstrikes overnight that took out several top military leaders and damaged their nuclear sites. And we turn to President Trump's reaction to the attacks. He posted on Truth Social just about an hour ago, saying Iran must make a deal before it is too late, adding that he gave Iran chance after chance to make a deal, and they couldn't get it done. The post coming after the U.S. said it knew of the Israeli strikes beforehand, but was not involved. And turning to some company news here, Nippon Steel's planned takeover of U.S. Steel may not proceed if the Japanese company has, quote, insufficient freedom of management. Japan's Nikkei citing an unidentified executive as Nippon continues to push that U.S. Steel becomes wholly owned. Nippon declining to comment when reached by Bloomberg News. That's your Bloomberg Brief. John?
Hey, Yahara, thank you. Appreciate it. Up next on the programme, geopolitical risk sparks a flight to safety.
What you're seeing is typically the reaction from not only risk assets, but from treasuries, from gold, so really across the asset classes. You're more likely going to see people fade those geopolitical risk events rather than double down on them.
We'll get you the market take next. We'll catch up with Tipp of PGIM, Fixed Income, live from New York City. This is Bloomberg. Punchy move in crude this morning, up by 8%, 74.90 on Brent. WTI up by 8.4, 73.73. Under surveillance this morning, geopolitical risk sparks a flight to safety.
What you're seeing is typically the reaction from not only risk assets, but from treasuries, from gold, so really across the asset classes. You're more likely going to see people fade those geopolitical risk events rather than double down on them.
Here's the latest this morning. Investors rushing into bonds, pushing yields lower briefly as tensions between Israel and Iran reach a boiling point. Joining us now to discuss is Robert Tipp of PGIM. Rob, I said briefly because yields now are up, particularly at the front end, by about 2 basis points. It feels like a tug of war between natural risk aversion out of risk assets to something else, plus an inflationary development. What would you put more weight on, one versus the other?
Right. Well, actually, for right now, the market is, in some respects, putting more emphasis on the Fed, this point in the cycle. I mean, actually, from the best levels at some points overnight, we've seen some flattening of the yield curve, where effectively having a higher oil price reduces the odds of Fed rate cuts, which then is positive for the inflation outlook, leads to a flatter curve. So that's rather ironic. But we've seen a lot of these situations in the Middle East over the years, going back, and they're all at different points in the economic cycle. So when you go back to 1990, that was hitting in the middle of a recession. This one is hitting in the middle of a pretty firm economic backdrop, albeit one with a lot of anxiety.
Yep.
But it leads to a different kind of market reaction.
To your point, starting points matter. So let's talk about the starting point. We've made some progress on inflation, 4 consecutive months of downside surprises. Where are we now, Robert? And do we risk upending some of the progress we've made?
Definitely. We have had 3 good months of inflation. But the problem with this cycle is before the 3 months of good inflation, we had 3 months of terrible inflation. And then before that, last year, there were months of good and then months of bad, and not just one, but a few and a crack. And that's why this has been such a difficult cycle for people to get their arms around. And the same has been true on the real economic activity, where you get a few strong months, a few weak months. And so the Fed is in this constant push and pull of, oh, yeah, we've succeeded. We're going to be able to cut interest rates. Oh, no, we have to really, stand tough. And already most inflation forecasters were looking for inflation to go up as a result of tariffs, if not in yesterday morning's number, definitely in the next several numbers that are coming.
True. So it begs the question, Rob, let me jump in the time we have left.
Yeah.
What does it mean for the Fed next Wednesday when they've got to put out forecasts?
Yeah, so they're definitely going to be on hold and evaluating, and I think it's going to make them very reluctant to even change their dots, make any fine tuning. They're going to want to say they need more information. And going back to that 1990 incident where people think, Kuwait's, being invaded and the Iraqis being repulsed was very quick. That actually took a few months for the price of oil to make it all the way up to the top. So these things can take some time to evaluate. We're not in a weak economic backdrop. The Fed's going to have time to evaluate. I think they're going to stand pat, try to talk down volatility, talk about the firm underlying situation.
Robert Tipp of PGIM. Rob, appreciate the time, sir. Thanks for making time for us this morning. Bond yield tower at the front end by a couple of basis points. Big rally in crude so far this morning. Up next, we'll catch up with Kennon of Clear Harbor Asset Management, Norman Roule of CSIS, the Ford CEO, Jim Farley, and Sonja Marten of DZ Bank. Live from New York, the second hour of Bloomberg Surveillance is just around the corner.
The concern around where inflation is going is much greater than what we've seen in the data so far.
Americans don't need to worry about losing their jobs this year, but they do need to worry about their grocery bill.
Central banks at the end of the day want inflation expectations to be anchored.
Jay Powell at his last press conference says that he was a little bit late when he cut in September. If he was a little bit late then, what does that make him now?
The Fed wants to be, quote, late to the game.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Live from New York City this morning. Good morning to you all. The second hour of Bloomberg Surveillance starts right now. And the headline we wake up to this morning reads as follows. Israel strikes Iran. Here's the market reaction. Equity futures down by 1% on the S&P, on the Nasdaq down by 1.3. In the bond market, 2-year, 10-year, 30-year. Check this out. Yields aren't lower. Yields are pushing higher. At the front end of the curve by 2 basis points, 392.65. Off the back of this move in crude, the potential for a inflationary development. Crude higher by 7.9%. Brent 74.84. WTI 73.70.
This is because the third of the world's oil exports are coming from this region, Jonathan, and Iran has notably in the past always threatened to close Hormuz, where not just Iran exports barrels, but also Saudi Arabia, the Emiratis, the Iraqis, Qatar, when it comes to natural gas or any sort of energy exports, can go through there. That is the concern. Bloomberg Economics running the numbers. They're saying if we were to see something of an escalatory to as aggressive as closing Hormuz, you could see $75 to over $100, $130 a barrel of oil. This comes down to Israel launching airstrikes on Iran's nuclear facilities, ballistic missile programs, and I think where they've hit Iran the most vulnerable, is the top brass of their military.
You'd have to believe the response to some extent is proportional to the perceived threat and ultimate goal. What are the goals this morning of Israel? Is it targeted, limited? Is it about degrading military and nuclear capabilities, or is it something much bigger? Is it about toppling the regime?
Well, Stephen Cook from the Council of Foreign Relations was just on with us, and he was talking about how basically maybe it's a little bit of both. What we continue to hear is that Iran has been reaching a point of almost no return of developing a nuclear weapon. The president in March, I reported in a letter he sent to Tehran, is he gave them 2 months. We are now at 3 months to striking a nuclear agreement. They were supposed to have a 6th round of talks this Sunday. Iranian state TV says that those talks with Steve Witkoff in Muscat are now going to be canceled. What you heard from Stephen Cook there is this is more than just degrading the military operation and also stopping Iran from making a nuclear weapon. It is about regime change.
We're waking up to an 8% move on crude. We were in the 60s. We're now deeper into the 70s. If you are just joining us, welcome. We begin this hour with our top story. Israel launching airstrikes against Iran.
Israel will never allow those who call for our annihilation to develop the means to achieve that goal. Tonight, Israel backs those words with action. We struck at the heart of Iran's nuclear enrichment program. We struck at the heart of Iran's nuclear weaponization program.
Our team coverage starts right now with Bloomberg's Tyler Kenton in Washington and Jemana Basechi in London. Jemana, I want to come to you. It was a conversation we've all been having at Bloomberg throughout this morning. What are the goals of the Israeli leadership?
The goals are quite clear if you listen to the Israeli Prime Minister's speech after the attacks last night. And he said with no hesitation that they will keep going until they are absolutely confident that Iran cannot develop a nuclear weapon. And for months now, there have been many signals suggesting that Iran has enriched enough uranium to suggest that they are months away from a nuclear weapon. And this is really the backdrop to the talks that have been taking place between U.S. and Iran to try to come to an agreement to stop them from getting to weapons-grade material, i.e. to curtail the nuclear enrichment program. But lots of questions about these so-called red lines, with Iran saying that they will never agree to no further enrichment, with the U.S. and, of course, Israel pushing for a much more hawkish stance. And it seems as though the Israeli Prime Minister and the government's patience had worn thin, and they decided to take things into their own hands by launching these unprecedented attacks on Iranian nuclear facilities overnight. These are the most significant attacks going back to the 80s, and really even surpassed the attacks that we saw last year in April, not only targeting those nuclear sites, but also taking out some key commanders as well. We're talking about the head of the IRGC, the chief of staff of the armed forces, a senior advisor to the Ayatollah, in addition to dozens of potentially of nuclear scientists as well. The number there being reported close to around 25 of them. And so it does constitute a big setback for Iran's nuclear program. The question is whether it will lead to an eventual full dismantling. At this point, the initial signs, and especially if you look at the IEA and what they've been putting out this morning, they suggest that while some of these facilities have been targeted, there are no signs of nuclear radiation, which means that the enrichment itself, the material itself, hasn't actually been hit yet. And as we know, two of these major sites are very well buttressed. They're deeply embedded into the mountains in Iran, which is why the Israeli Prime Minister has said they will keep going until they're absolutely convinced that Iran can no longer continue. Iran, on their side are saying that they will avow a very harsh retaliation. What that retaliation looks like remains to be seen, especially because they have tried several times in the last year to go after Israel and fire ballistic missiles, drones. Most of those have been intercepted. And the question is also whether they may look to restart or reuse their proxies in the region. Many of those proxies also in the back foot. We talk about the regime change in Syria. We talk about Hezbollah severely diminished as well. And whether they have the ability or even the appetite to get dragged into a regional war would be a big question. What I would say as well, though, is if you look at some of the key Arab Gulf allies in the region, they were very quick to come out. Saudi Arabia condemning the attack, but also calling for de-escalation. Similar stance coming from the UAE as well. None of these Gulf allies want to see further escalation or intensification. And to go back to what Annmarie was saying, of course, oil has to be front and center. One method that Iran could actually end up responding is if they decide to go down, causing disruption in the Strait of Hormuz. But then many analysts would say that they'd be shooting themselves in the foot there.
Well, absolutely, because they'll have no way to export and they need those funds. That's the view from the Gulf. Tyler, what have we heard from Washington this morning?
Yeah, hey, Annmarie. Well, President Trump said that Iran must make a nuclear deal quickly before it's, quote, too late. It's clear that he's trying to keep these talks on track and pursue that more diplomatic solution here. But at the same time, he also told Fox News last night that he's waiting to see what Iran's retaliation is going to look like, but that ultimately the U.S. would be prepared to defend Israel if necessary, according to their report. Now, he did allude to that as such in his post on Truth Social earlier, too, saying that the U.S. makes the best and most lethal military equipment and that Israel has a lot of it, with more to come. Of course, Israel is the largest cumulative recipient of U.S. foreign aid since its founding. We have to keep in mind, though, that this could be days of escalation, which would weigh on a potential response. And at first, the U.S. really did sort of distanced itself from the operation. You had Secretary of State Marco Rubio coming out with a statement immediately after the airstrike saying that the U.S. is not involved in this and that the top priority is protecting U.S. troops in the region. He, of course, Annmarie, did warn against any sort of retaliation against U.S. personnel or interests in the Middle East.
Tyler, Jemana, to the both of you, thank you. More from both of them in the next hour or so. Just want to pick up on a couple of things that Jemana said. Important. When we think about the potential response, it's not just about winning this, it's about ability. And maybe focusing on the ability of Iranian proxies to respond this morning is probably the more important conversation.
Right, and also Hezbollah, as Jumana was talking about, and Stephen Cook, at the moment, Lebanese government saying Hezbollah does not want to respond. We also saw what Israel did in terms of decimating the top brass of Hezbollah last year. You also have what's going on in Syria. There's no more Assad there, and Israel has a lot of control over the Syrian airspace. I think when it looks to the proxies, and of course we need to remind our audience, Iran is the biggest supporter of state-backed terrorism. When it looks to the proxies, it's going to be the Houthis that are potentially the ones that are going to go after potentially oil tankers, potentially shipping routes that are going towards Israel. And we've seen the Houthis do that in the past, especially when it comes to Saudi Arabia, like when they went after those massive facilities.
The initial reaction in financial markets was the South stocks pretty hard at 8 p.m. yesterday night. Last night, this morning recovering. We're down by just 0.9% right now in the S&P 500. The move in crude holds, though, up by 7 to 8% through much of the last few hours or so. Brent crude at the moment, 74.83. WTI, 73.71. Let's focus on the view on Wall Street this morning. Joining us now is Aaron Cannon of Clear Harbor Asset Management. Aaron, welcome to the programme, sir. Got to focus on the economic picture. Whether this is a risk that introduces an inflationary development that upends the outlook. Do you think it is?
Well, we'll have to see. I mean, these tend to be shorter-term events. We look back in Trump's first term, and the lead Iranian General Soleimani was taken out by the Trump administration. You remember he was visiting Iraq at the time. And markets were off about 1%. Equity markets that day, I think oil was up 4 or 5%. We did have slightly lower yields, unlike this morning where we have slightly higher yields. But gold was better bid by a little over 1%. And then, that sort of faded a couple of days later. I think that the risk here for markets is whether or not there's an escalation. You mentioned the Strait of Hormuz, where 25% of global oil travels. And I think that would be the risk. But we'll have to see what happens over the weekend for sure.
Let's just focus on treasuries just for an extra beat. We were having this conversation earlier on this morning, Aaron. Yields are higher. They're not lower, particularly the front end by 2 or 3 basis points. Do you think that tells you something about the nature of the risk, the dominant risk, or does it tell you something about treasuries?
I think there are two things going on. One feeds in from your first question, which is this could be an inflationary event. If we did see a spike in oil, it would feed through into the cost of goods and CPI. And so we have to keep that, very, very much in mind. The other is the tariff issue is still front and center for the global economy. Only the U.S. and UK have a deal. And to the extent that we see prolonged negotiations or just more permanency to the tariffs, Jonathan, that may generate more revenue for the U.S., but it's certainly going to impact costs at the manufacturer level as well as the consumer level. And I think at the end of the day, too, if we're just doing less trade on the margin with the rest of the world, as I've mentioned recently, there's less incentive for these countries from a central bank reserve perspective to maintain those treasuries in their reserve bucket.
Aaron, we always hear that the market can only focus on one thing at a time. Right now, I'm also almost shocked you brought up trade on a morning like this. Is the market only going to focus on geopolitics that's happening in the world?
Well, we heard about all this going on last night before we went to sleep, and the market's already sort of rallied from the lows. Oil's still elevated because I think, we're wondering if there's going to be some sort of response from Iran. But, you bring up a good point, Annmarie. I do think my guess is in the weeks ahead, we'll be pivoting back to not just, geopolitics and the tariff debate and what's going on between Russia and Ukraine, but we'll be thinking again about, Q2 earnings. And gosh, we were talking about a 30-year bond for the last couple of weeks, and we had a strong auction yesterday. Now we're not talking about that this morning.
I'm pleased you brought that up. It went well. 10-year issue went well as well. And so far this week, we've had a disinflationary story emerge in the data. It's a good thing, both in CPI and in PPI. And it was setting us up, I think, for a different conversation next week at the Federal Reserve, given that we had continuing claims and initial jobless claims at highs for the year. Now, Aaron, I just wonder, with the new risk this morning, what the Fed's approach is going to be next Wednesday.
I suspect they're going to remain on hold. There's lots of pressure for them to cut rates from a political perspective. And as you just mentioned, we did see somewhat benign CPI data. We did see benign PPI data. But keep in mind, and we're all supposed to be tariff experts, even though we've never really lived through a tariff war before, but it would seem as though it's going to take a little bit of time for pricing to push higher. And, for Liberation Day to occur in April and for us to expect CPI to dash upward in May seems a little silly. And, maybe we start to see that in July and August. The other issue, too, is, rents have trended upward, and that hasn't fed through yet. And that's like 25% of headline CPI and about a third of CPI ex food and energy. So, we want to keep that in mind, too. There are other pushes and pulls beyond tariffs that are potentially going to be nudging up inflation going forward. But if the economic growth picture really starts to fade, that could be the offset. And maybe, that would give the Fed a little bit of room to start cutting towards the back half of the year, which is what I still anticipate.
Aaron Kennon of Clear Harbor Asset Management. Aaron, a different conversation to the one I expected to have with you this morning. We'll catch up again soon. Off the back of these moves in the Middle East, crude and Brent a whole lot higher. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Yahara Arnott. Hey, Yahara.
Hi, John. We start with the latest out of those attacks. Israel launched another round of attacks on several locations in Iran, including the Natanz nuclear site. The Tasnim news agency reporting the city's airport was under heavy attack earlier. Meanwhile, Iran is vowing lethal retaliation in response to the wave of Israeli airstrikes overnight that took out several top military leaders and, of course, damaged nuclear sites. Meanwhile, airspace across the Middle East has been disrupted amid the escalation. Both countries have halted overflights, with a number of neighboring countries following suit, including Iraq, Lebanon, Syria, and Jordan. The closures are sending shares of airlines falling across Europe and the Middle East, with flights being forced to take detours. And authorities in India have begun the investigation into yesterday's plane crash that killed over 260 people. The Hindustan Times is reporting that one of the plane's two black boxes, which contain, of course, critical details on the events of the flight, has been recovered and secured. But the second black box has yet to be found. That's your Bloomberg Brief. John?
Yahara, thank you. Appreciate the update. Up next on the program, Israel attacks Iran.
I've made it clear time and again, Israel will never allow those who call for our annihilation to develop the means to achieve that goal. We struck at the heart of Iran's nuclear enrichment program. We struck at the heart of Iran's nuclear weaponization program.
Coming up on the programme, Norman Roule of CSIS with the White House on high alert. Reaction from the C-suite with the Ford CEO, Jim Farley, and Sonja Marten of DZ Bank on a big rally in crude. Live from New York City this morning. Good morning. Big rally in crude this morning. Oil and Brent higher by close to 8%, up by 7.6% on Brent crude, 74.65, up by 8 percentage points on WTI, 73.56. Under surveillance this morning, Israel attacks Iran.
I've made it clear time and again, Israel will never allow those who call for our annihilation to develop the means to achieve that goal. We struck at the heart of Iran's nuclear enrichment program. We struck at the heart of Iran's nuclear weaponization program. We targeted Iran's main enrichment facility in Natanz. We targeted Iran's leading nuclear scientists.
Here's the latest this morning. Israel launching another round of attacks on Iran, including the Natanz nuclear site. Iranian state TV reporting the city of Tabriz is under heavy attack. President Trump posting earlier, quote, "I gave Iran chance after chance to make a deal. They must make a deal before there is nothing left." Joining us now, the former senior US intelligence official, Norman Roule. Norm, welcome to the programme, sir. We'd love just your initial reaction to developments overnight this morning.
Good morning. Well, the operations are ongoing, and we don't yet know ultimately both the aims of the operation and Iran's response will dictate the course of the events. But we can say the following. First, Israel has likely taken out a senior echelon of Iran's senior-most military leadership. This will weaken the IRGC and the military. It is possible more than a dozen, perhaps a couple of dozen of senior officers have been killed. Not only the senior officers, but their staffs around them may have been killed while they've been meeting. This will make it difficult for Iran to respond. There'll be confusion and disarray. Some nuclear sites have been hit. That won't destroy the sites, but it will certainly stop their operations. So the question comes down to this. First, how will Iran respond? And what will that response say about Iran's capabilities and Iran's organizational skills? And secondly, what are Israel's goals in changing Iran's ultimate intent in developing a nuclear weapon? But Iran is fragile politically, economically, and certainly in a security fashion. The United States does not want to see a regional war break out, nor does the Gulf. And Israel does want to see a different regime in Tehran and certainly no nuclear weapon.
Norm, when you have individuals like Hussein Salameh being taken out, the IRGC Corp commander, how do they respond, given how vulnerable they are and their top military brass being killed?
Well, they've had some extraordinary people reportedly killed, to include the head of their aerospace organization who managed all of the missiles and drones, General Hajizadeh. And again, the staff around them may have been killed as well. So their ability to respond would be difficult because you have an organizational gap. People who would issue orders, who would have plans, who would have that networking skill. So it may take a little bit of time for Iran to respond. If Iran does not respond, that will show that we're in a very different place, that Iran has been perhaps strategically defanged. Iran cannot allow that to happen. So if you're in Tehran now, your goals are to very quickly organize to see what has happened, to survive, and to then reset deterrence against Israel and to show the region and the United States that you are still a power to be contended with.
Given the extent of these strikes, how proportional can the response from Tehran be?
Well, that depends upon Iran's capabilities. They've launched a couple of hundred drones. That's fairly low level. Israel will be able to deal with those rather expeditiously. The regional countries will not tolerate Iran using their airspace, so the drones won't be a major threat. The question becomes, what can Iran do with its ballistic missiles against Israel, and how will Israel's air defenses respond? And this really, I think, will dictate the course of the conflict. If these missiles perform poorly, if Israel's air defenses are able to perform very well, I think you're going to see us be in a very different place regarding Iran's strategic position in the future. But God forbid, if you have significant civilian casualties, we may have a very different situation as well.
Noam, we've got a quote from the president to ABC. Allow me to share it with our audience this morning. I think it's been excellent. We gave them a chance and they didn't take it. They got hit hard, very hard. They got hit about as hard as you're going to get hit, and there's more to come, a lot more. So that's as close to an endorsement of the action of Israel on Iran overnight from the president as we've come so far this morning.
From what I understand, when it comes to this White House, they always wanted to take a diplomatic route, Jonathan. But the issue was, of course, if there was no diplomatic route to be had, then they were always going to have a military option on the table. Israel took the military option. Norm, I wrote March 19th. A letter was sent from this White House to the Ayatollah saying you had 2 months to strike a deal. Is there any possibility for a diplomatic deal to be done given the state of affairs this morning?
Not in the near term, but this White House has been consistent. Again, they do not wish to see the United States embroiled in a military conflict in the region, to include a regional conflict ignited by Israel. They do want to see a diplomatic approach, but Iran has not been willing to concede on any of the fundamental issues in the talks thus far. So this is Iran's decision that has led to this situation. Now, if there's a result of this ongoing conflict, Iran's internal decision-making changes, Iran could have an open door to a diplomatic solution, say a consortium to retain portion of its nuclear program through the U.S. talks. It's an unlikely solution in the short term, certainly, but in the medium term, it is possible. And again, the United States is willing to pursue that route.
Norm, to what extent do you think the U.S. will make sure that they are on hand and helping Israel in terms of their defense?
Well, we must remember there are between 200 and 250,000 Americans who live in Israel at any one time. And we have a responsibility to protect our own citizens as well as the citizens of our partners. Europeans have to do the same thing. So in terms of defense, I think it depends upon what does Israel need to defend that civilian population from the Iranian threat? What does our shared intelligence pool tell us that threat happens to be and what is needed? And there's also what the regional capabilities are going to be to defend their airspace. Once that complete picture is put together, then you'll be able to determine what assets are needed from the United States to assist the Israelis.
Norm, appreciate your time, sir. Norman Roule there, the former senior U.S. intelligence official. Still building that picture this morning. Here's the latest from the President of the United States, reportedly telling ABC the following. Here's the quote in reaction to the attack on Iran, saying that I think it's been excellent. We gave them a chance and they didn't take it. They got hit hard, very hard. They got hit about as hard as you're going to get hit, and there's more to come. A lot more.
So I think that end of that quote is interesting. There's more to come. We do know that this administration, they're not saying they gave a green light to this, but they were given a heads up. This is why you saw some personnel at the embassies being taken out of the region. And the president there is saying more is to come. What we've seen overnight is Israel go after nuclear facilities, ballistic missile, military operations, as well as top military brass.
Crude up this morning by 8% on WTI. Similar move on Brent. Up next, markets watching the Middle East. We'll get reaction from the C-suite with the Ford CEO, Jim Farley from New York City. This is Bloomberg. Heading into the weekend with some losses here. We're down by 1% on the S&P, negative by 1.3 on the Nasdaq. On the Russell this morning, we're down by 1.5. In the bond market, you're hearing lots of talk about a flight to safety. You're not seeing it in the bond market, and we've had some pushback this morning from various guests suggesting this is because the dominant risk is an inflationary one that might keep the Fed on the sidelines for longer. The 2-year at the moment yields are higher by a basis point, 391.61. You're just not seeing a big move in treasuries at the moment. Where you are seeing a big move is in crude. WTI and Brent this morning up by anywhere between 7 to 8% at the moment. Brent just short of 75. WTI was in the low 60s this time last week. Now we're at 73. $1.55. That's the cross-asset price action. Let's get you some single names, some morning movers with Danny Berger. Hey, Danny.
Hey, John. The breath is absolutely to the downside this morning, but the one sector that is shining bright is energy, and it is exactly because of that oil board that you just saw, with the moves reflected in names like ConocoPhillips, Exxon, Chevron, gaining at least 3% this morning off the back of already a strong week for a lot of these oil majors, thanks to stronger economic data. Now, elsewhere, we do have some company news. The Wall Street Journal reporting that some of the largest merchants like Walmart, like Amazon, like airline operators are looking at issuing their own stablecoins. Part of the idea of this would have their own payment systems to get away from the fee-based system that they face with other operators. Who benefits from that? It is Visa and MasterCard. Both of those shares falling in the pre-market off the back of that news. Not huge losses, about 2.4%, 2.7%, because this may take some time if it does happen. Finally, we did get some earnings post-market yesterday. Easily the biggest mover so far this morning to the upside is RH, the luxury company when it comes to furniture, up 18.5%. That's because they issued no change to their guidance. That was good enough for a market that last time they heard earnings from them was on April 2nd, where the CEO had to react in real live time to the reciprocal tariffs, used an expletive at that time. So the bar was pretty low, and they surpassed that, John.
Danny, thank you. Thanks for the update. More from Danny in the next hour as we work our way towards the opening bell. There's always something to worry about in financial markets. Things are moving so quickly at the moment in these financial markets, though. We've forgotten what we were worried about only a few days ago. Inflation data, CPI downside surprise for a fourth consecutive month. PPI came in softer than expected as well. Those auctions, 10-year, 30-year, totally fine. 10-year, 30-year auctions earlier on this week. This morning, seemingly worried about something else. On our radar this morning, Israel launching another round of attacks on several locations in Iran, including the Natanz nuclear site. The Tasnim news agency reporting the city's airport was earlier under, quote, heavy attack. Israel began airstrikes on Iran last night.
And Prime Minister Benjamin Netanyahu has said that these strikes are going to continue. The president, speaking to ABC, also saying more is to come. They're going after nuclear facilities, military where they have ballistic missiles. You have reports of Mossad actually having these covert operations, sneaking into Iran and trying to put a damper on what their response potential could be. And then, of course, going after top-level personnel. We are talking about the IRGC commander and individuals underneath him as well. This will make Iran, one, incredibly vulnerable, and also potentially how they're able to respond incredibly challenging.
So speaking of responses, we had the president's response reportedly telling ABC the following, and here's the quote. I think it's been excellent. We gave them a chance. They didn't take it. They got hit hard, about as hard as you're going to get hit, and there's more to come. The President of the United States just moments ago. And he'll be speaking today with his National Security Council. He's having a meeting at 11 o'clock a.m. in the Situation Room. Potentially we'll get more of a briefing after that. I imagine individuals like the Defense Secretary Pete Hegseth, Secretary of State, also NAC Director Marco Rubio will be there. So potentially we will get more from this administration on what they see in terms of the path forward. Stephen Cook almost said it earlier. When you're a president, maybe you can have it both ways. President Trump is, in a way, endorsing what Israel did in this statement to ABC News. But at the same time, in his earlier post on Truth Social, the president was saying now is still time to act. They still want a diplomatic route. So potentially, maybe they're going to push for that. Lots to debate this morning with crude higher by 7 to 8%. Let's head over to Le Mans, France, where Bloomberg's Matt Miller is standing by with a special guest. Good morning, Matt.
Good morning, Jonathan. Yeah, I'm here with the CEO of Ford, Jim Farley. And Jim, a lot to talk about here at Le Mans with you. You just got out of a race car. But before we do that, I want to ask you about the Israeli strike on Iran and the counterattack. Are all of the Ford employees that you know of in safe places? You do have operations in the Middle East.
We do. It's a really important region for us. We're watching Turkey as well. We have a huge operation in Turkey. We export all the way through Europe and the UK. So far, so good, but it's clearly a concern for all of us in business.
One of the things we've seen as a result, obviously, is the oil price rise 5 or 6% really across the board. Has the low oil price been helpful to you, or has it not helped to encourage people to buy electric cars?
Yeah, it's interesting because it cuts both ways at Ford. We're 60% almost of the commercial business in the U.S., and a lot of that is energy. So you go to Odessa, Texas, everyone drives a Ford Super Duty. So, if oil isn't in that $65, $70 range, our customers suffer. But, obviously, I think for the economy and for everything, it needs to be in that kind of range that makes sense for everything. Large spikes, big changes in oil prices and gas prices have huge impacts on our demand. We see truck and full-size SUV demand go down when there are big spikes. Happen in 08, happened many times. So, no, I don't think car business likes big changes for the consumer. It's very stressful for them.
The electric business, though, I would imagine also is dependent on, in some sense, higher gas prices.
It is.
I drove your Lightning. It was fantastic. Spent a week in it. I've driven the Mach-E for a couple weeks. And one of the great pleasures is you don't ever have to go to a gas station, right?
Yes.
How are those businesses doing right now? Because you've taken such big losses there and maybe slowed down in terms of your progress into EVs.
Yeah, we've really changed because we're thankful. We've been number 2 to Tesla for 3 years in the U.S. Because we spent our capital like 5-6 years ago, and all that product's been out for 4 years that you mentioned. So we've learned a ton. Now we've changed our capital allocation for EVs. We've reduced the spending, changed the battery chemistry a lot to focus on more profitability. We've gone down market and mostly in commercial. Those are the only markets where we think in the U.S., an 8-7% of the industry is going to make sense for EV where you can actually make money. And the EPA requirements have a big impact on the EV investments by OEMs. During the last several years, we had to kind of sell like 15 to 20% of our mix to be EVs, both for the ZEV states, California, Colorado, New York, but also, to meet the national tailpipe emissions. And so what's happened, interestingly, the total number of EVs in the U.S. has grown, but the total revenue has not changed in 3 years because the prices have come down equal to the volume going up. So the EV market has not been growing for 3 years if you look at total revenue. Everyone looks at unit volume. Don't look at that. Look at the price and the volume. And I think we now have a good strategy going forward. A lot of our competitors are just investing for the first time. And good luck if you're selling an $80,000 SUV electric vehicle. We've invested a lot in hybrid. We are really successful with our truck hybrids. The best-selling vehicle in the U.S. for 47 years has been the F-150. 25% of those customers now buy hybrid, and a lot of it is exportable power. You can run your house for 6 days with an F-150 hybrid now, and the others don't offer that at all. So, yeah, we think hybrid is really the mainstream technology. We'll see EREVs come to the U.S. soon as the next technology for partial electrification.
I want to ask you about race on Sunday, sell on Monday.
Okay.
Since we're here at Le Mans, since
Sure.
you just got out of a
Sure.
Mustang race car, how does this racing effort, and it's a big effort, trickle down to the bottom line for Ford shareholders?
Well, for us, the biggest is off-road market. We have, almost 20% of a global profit coming from our enthusiast off-road products. And we race at Dakar, we race at Baja, we race at King of the Hammers. That's a big thing. I don't think there's a better way to promote your brand. Look what Ford winning in '66 at Le Mans did for Ford Motor Company. It made us a global company. We're an American company, but that moment changed us completely. And that's why we're going back in 27 to take on Ferrari and take on Porsche. We think we have the technology, also the tech transfer, software, battery tech, aerodynamics. It's different than the 70s, but the tech transfer over to our road cars is immediate. You'll see hundreds of Ford engineers here who will be working on Monday on our road cars. And it's really important tech transfer. But we do it, I think, as smart as we can. And maybe as a racer, I'm more sensitive about wasting money on racing. And we challenge ourselves to be really smart. I think we've done a great job with the off-road, the Raptors, the Tremors, all the Broncos. I think that's been, frankly, some of the smartest investment we had in racing.
You say you're an American company. You touted yourself as literally the most American car maker. 80% of the cars that you sell in America are made there. Donald Trump was out overnight saying maybe he's going to go after even higher auto tariffs. While you've said in the past that causes costs and chaos, does it also kind of help you because no one else makes as many cars as you do in America?
Well, for Ford, this is a moment for us. We have employee pricing out there. We gained a couple points of share year over year. A lot of Americans are shopping Ford because now they're starting to think, hey, half the cars in the U.S. are imported. And if all the car companies were like Ford, there'd be 15 new factories in the U.S., 1 million new jobs. I think a lot of Americans are starting to pay attention to where these cars come from. And for us, yes, I think Donald Trump's policies especially around the Asian countries where, you know, they've supported with subsidies, direct or indirect, for their automobile industry. You know, this is a great thing. We have to sort out this Mexico-Canada thing because we need to keep the vehicles affordable in the U.S. And there's actually a lot of parts we can't even make in the U.S., Matt, as you know. And so we have to kind of sort out what role does Mexico and Canada have in our North America market from a supply chain and manufacturing, keep the vehicles affordable. And that's something that we're talking to the administration. We found the administration to be very positive to work with. They want to help companies like Ford that did the right thing for Americans, but we have more work to do.
In terms of what the administration's been trying to do with China, are you satisfied with the rare earth minerals that you have access to? I know that you had to slow down production in the past.
Yes.
Have you been able to secure the amount of magnets that you need?
It's day-to-day. It's day-to-day. These high-powered magnets, the raw materials for them only come from certain places in the world. They're all processed in China, and they go in your speakers and your auto system. They go into your motors for your wipers and your seats. They're all over our F-150, for example. We have applications in the MOFCOM. They're getting approved one at a time. You know, we're educating the administration. We're educating the Chinese leadership about how important these jobs in the Midwest are that are dependent. We have had to shut down factories. It's hand to mouth right now. And I'm reading the paper like everyone else. I was very happy to read about London and having a good meeting there because it has a direct impact on our jobs in Michigan and Ohio. So we'll see. It's hand to mouth right now.
Jim, thanks so much. Really appreciate your time, and congratulations on the race.
Thank you.
This morning, look forward to you in the challenge tomorrow. John, back to you in New York.
Hey, Matt, thank you, buddy. Appreciated following that conversation. Thank you very much. Let's take the opportunity to get you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Yahara. Hey, Yahara.
Hi, John. Here's the latest on the strikes. Israel launched another round of attacks on several locations in Iran, including the Natanz nuclear site. The Tasnim news agency reporting the city's airport was under heavy attack earlier. Meanwhile, President Trump reportedly spoke with ABC about the strike, saying, quote, I think it's been excellent, and there's more to come. Meanwhile, gold is spiking, fueled by haven demand from investors after those attacks in the Middle East. The move higher extends a two-day gain. Gold has rallied 30% this year as investors look for hedges against the Trump administration's trade policies and now geopolitical tensions. And the CEO of Advanced Micro Devices says its latest AI processors can top NVIDIA's. Linda Su said the new installments in AMD's MI350 chip series are faster than NVIDIA's competing ones. She expects the AI market to surpass $500 billion in the next 3 years. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara in the next hour. Up next on the program, inflation worries resurface.
It's a pretty rational reaction to see treasuries roughly trade flat. We're continuing to play these fears around stagflation in the next couple of months, perhaps away from what's been happening overnight.
Up next on the program, we'll catch up with Sonja Marten of DZ Bank with a look at this market from New York City. You're watching Bloomberg TV. Live from New York City this morning. Good morning to you all as we work our way towards the opening bound. 1 hour and about 43 minutes away. Your scores look like this. Equity futures on the S&P down by 0.9%, slowly recovering as the session grows a little bit older. On the Nasdaq 100, we're down by 1.1%. In fixed income, 2-year, 10-year, 30-year, it's actually been a decent week for bonds. CPI, PPI, downside surprises, the right kind of downside surprises. Beyond that, better auctions, 10-year, 30-year, no problems there. This morning, yields just about unchanged on a 10-year, 436.32, on 2s, 391.40. Maybe you can say it's not working as a haven asset. I think people would push back against that this morning and suggest the dominant risk was an inflationary one. And that's the focus in the commodity market. WTI, Brent crude, a whole lot higher so far this morning, up by 6.8%, pairing some of the gains from earlier on. $74 on Brent, WTI 72.90 as we put together a picture of what happened overnight and what is still happening through this morning.
Still happening through this morning. What we see, these strikes continue on Iranian nuclear facilities. The IDF was talking about the IRGC Air Force commander in this hour that they have said that they reportedly killed. This is on top of the IRGC general commander. And Benjamin Netanyahu is saying these strikes will continue, which is why people think that when Iran comes out and says maybe we will close Hormuz, which they've never done, maybe this time is different and they actually will do it, even though that won't hurt Israel and actually could hurt themselves.
Let's just sit on the US involvement. Secretary Rubio, I think, made an effort to distance the United States from the actions of Israel overnight throughout this morning. We heard from the president 30 minutes ago with a statement reportedly to ABC, and the quote said that this action was excellent and there's more to come. What does that tell you about the U.S. position on what's developing at the moment?
Well, the president completely undermined what Secretary Rubio said last night and didn't put a lot of distance between him and Benjamin Netanyahu, and also shedding light that he knows more is to come. So obviously there has been conversations between these two countries. I think a key question is, will the U.S. at any point help Israel in its attack against Iran? And then when Iran decides to retaliate, more than the 100 drones we saw that have been struck down, will the U.S. really come to the Israeli defense?
That's a conversation we'll have in the next hour. Under surveillance this morning, inflation worries resurface.
It's a pretty rational reaction to see treasuries roughly trade flat. We're continuing to play these fears around stagflation in the next couple of months, perhaps away from what's been happening overnight. The underlying threat around debt sustainability, around fiscal sustainability, that's still there.
It's the latest this morning. The dollar's role as a safe haven facing a little bit of a test this morning following Israel's continued strikes on Iran. Sonja Marten of DZ Bank writing, Israel's attack on Iranian nuclear facilities has reawakened the US dollar's primal instinct as a safe haven and caused it to appreciate once again. Sonja joins us now for more. Sonja, welcome to the programme. I guess we should kick it off with this bond market first. In the bond market, yields almost totally unchanged. 2s out to 30s. What does that tell you about the risk, and what does it tell you about Treasury markets more broadly?
Well, I think, as you said in the program before, I mean, there's sort of two factors pulling and pushing, if you will. So we have, the inflation concerns with a view to the oil price and the risk of the Strait of Hormuz being closed. So that plays out in much higher oil price notations. And as a result, of course, we have seen some speculation that the Fed may not be able to cut rates as much as had been anticipated recently. And on the other side of that equation, obviously, you have concerns about growth, you have geopolitical concerns, and the latter pushing some safe haven demand. So that's kind of what's happening in the U.S. Treasury market. There's a push and pull there. And I think, we will have to kind of wait and see what that situation in the Middle East plays out, how that ends up, playing out in the next, days or weeks. And that's going to give us some fresh direction. But until we know more, I think what's going to happen is the market is going to hold steady and just kind of wait and see where this is going.
In the meantime, as you know, initial jobless claims and continuing claims in America have crept up to new highs for the year. At the same time, we've had a series of downside surprises on CPI and PPI, particularly through this week. Sonja, when the Federal Reserve gets together next Wednesday and they put out new forecasts and begin to think about how they might respond to adverse shocks, particularly in the labour market, how constrained would that easing bias be with the new outlook for inflation this morning?
I mean, to be honest, if the Fed's going to come together next week in a way almost has to raise the white flag. I mean, there are so many factors of uncertainty up in the air right now. I mean, it was difficult for them, to begin with in the recent months with Trump's very erratic trade policy and it being almost impossible to predict what's going to happen the next day. Now we have geopolitical tensions, a rising oil price. It's just made everything so much more difficult for them. Obviously, with a view to the economy, we do expect some slowdown in growth and, some easing in the labor market, and that would theoretically open up the scope for rate cuts, even if the inflation does rise as a result of tariffs, because, you could argue that tariffs is something that's going to happen to the inflation rate, and then 1 year later it falls out of the equation. You can look through that. If we now get a second inflation push through higher energy prices, that will, of course, make a big difference for the Fed. So the only thing they can do next week, in my opinion, and I think some of your guests previously have said this today as well, is to sort of take a very neutral stance, wait and see, and really avoid giving any strong guidance, because this uncertainty makes it almost impossible for them to make accurate predictions. And they really can't gain any credibility by trying to do otherwise. So no rate cut next week, wait and see.
They were dealing with uncertainty when it comes to trade. Now what do they do with this geopolitical tension?
Yeah, well, that's the problem. I mean, they they can't predict any more than we can how that's going to play out. I mean, I thought interesting early on, you had Steve Cook on the program and he talked about the motivations behind what's happening here. And I mean, one of the options he sort of, mentioned was that there's a bigger story at play here, and that would mean a further escalation. It would completely change the environment that the Fed moves in. So I think they have to just wait and see. That is all they can credibly do at this particular point in time.
When it comes to the Fed and their concern about geopolitics, does it come squarely to the price of oil?
I think mainly yes, for the time being. I mean, obviously, if we had a longer-lasting increase in energy prices, that's an inflationary factor which will play in to the Fed's equation. Having said that, if we were talking longer term, and for some reason we get sort of a further escalation, we get really high energy prices for a longer period of time, then you have a growth impact as well. So then we're back to the sort of these scenarios we've had during COVID. So this is the difficulty they're moving in. So it impacts them mainly right now, I think, on the inflation concern, though.
The dollar stronger against everything in G10 at the moment, Sonja. That's a counter move to the trend of the last few months, that's for sure. Do you expect that to continue?
Yeah. No. Unless we get a complete escalation in the Middle East, I don't think that's going to continue. I think we have seen strong evidence in recent weeks and months that the dollar sentiment has taken a real hit. And I don't just mean that we're having a weaker dollar because of growth or concerns. I think trust in the dollar has been not eroded, but it's certainly got damaged quite significantly in recent months by the erratic policy of Donald Trump. And I think that damage is not easily mended. People aren't looking at this right now. No one's talking about the big, beautiful tax bill today or Section 899, but these issues are not gone. So I think there is a damage that has been done here and that you cannot fix. And Donald Trump will be president for another 3.5 years. And I think we all know that there's not a high probability that, things are going to improve massively.
We'll see what happens. Sonja Marten of DZ Bank. Sonja, thank you. The dollar stronger against everything in G10 so far this morning. The euro had reached 116. We're back down to 115 and negative 0.7% on that currency pair. In just a moment, we'll catch up with Darrell Cronk of Wells Fargo. The Israeli ambassador to the United Nations will be joining this program. Greg Daco of EY and Vishal Khanduja of Morgan Stanley. That conversation with the Israeli ambassador, we need to figure out what the goals are. The operation is ongoing. What are we achieving? And who will be involved going forward from here?
That's exactly what we want to know. Definitely, we want to know the parameters of what their goals are, because what we've heard on this program this morning is that, first and foremost, they want to halt Iran's ability to create a nuclear weapon. But on top of that, Jonathan, what we've seen in terms of Israel being able to target top military commanders, the IRGC commander, is this what Stephen Cook alluded to, which is potentially regime change in Iran? And if that's the case, this is an existential threat for the regime. And what kind of response then is Israel preparing for?
Ability and willingness. We'll talk more about that in just a moment with the Bloomberg team. If you are just joining us, erasing losses in the equity market on the S&P 500 at the moment. We're down about 0.9% as we get closer and closer to the opening bell. The big move in crude, though, that sticks. WTI and Brent higher by 7%. 74 on Brent, WTI at 73. The third hour of Bloomberg Surveillance is up next.
There's a resistance at this point to really add a lot of risk.
We've seen some very unusual correlation moves, and I think that it's sometimes hard to figure out exactly why that is.
There's just the opportunity here to be a little bit cautious and you're not taking undue risk.
People still have very little appetite, but this is a well-told story. People are a little bit too bearish.
The single thing that investors are looking for right now, if I picked one out, it's certainty.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowicz, and Annmarie Hordern.
Live from New York City this morning. Good morning to all. The third hour of Bloomberg Surveillance starts right now with the opening about 90 minutes away and equity futures recovering from losses earlier in the session. Equity futures right now down by 0.9%, well off session lows. On the Nasdaq 100, we're down by 1.1%. On the Russell, we're down by 1.3%. In the bond market, not much price action. Yields down a basis point, up a basis point. This morning, just about unchanged on 10s. 435.53 in the commodity market. Oil, anything but unchanged. Crude right now, Brent and WTI higher by more than 7%.
Geopolitical risk premium coming into the oil market because of what is taking place right now in the Middle East. The strikes continue when it comes to Israel, targeting Iran's nuclear facilities, their ballistic missile program, and also continue to go after what we continue to hear this morning, more individuals. The top personnel that are leading the IRGC, the general commander, reportedly dead. So this is why individuals like Stephen Cook are saying this might be more than just Israel reaching a line where they're unwilling to accept where Iran is in terms of their uranium enrichment, and that actually might be looking for something more, which leads you to potentially regime change.
The operation isn't over. The U.S. involvement, Secretary Rubio distancing himself from the attack of Israel on Iran overnight. Then this morning, the president asked reportedly by ABC for his take on things, calling this event excellent.
Excellent. And he says more is to come. So basically insinuating that he has insight into what is going on and what Benjamin Netanyahu's next steps are and for how long potentially this might take, Jonathan. Last night with Rubio, he basically said we were aware of these attacks beforehand and then gave a warning to Iran, do not go after American military personnel. People were expecting potentially something. Remember earlier this week, we did have embassy staff have to evacuate the region. But now it begs the question, when will the U.S. potentially join Israel in strikes? And if they don't, how much are they willing to go to Israel's defense when we obviously will see at some point an Iranian retaliation?
We'll focus on that question in just a moment. Brent crude at 74.43, WTI just short of 74. Coming up this program, through the next hour, we'll catch up with Darrell Cronk of Wells Fargo as equities retreat, the Israeli ambassador to the UN, Danon, as escalations reach a boiling point, and we'll speak to Greg Daco of EY on inflationary risks for the months and year ahead. We begin this hour with our top story, a major escalation in the Middle East.
Israel will never allow those who call for our annihilation to develop the means to achieve that goal. Tonight, Israel backs those words with action. We struck at the heart of Iran's nuclear enrichment program. We struck at the heart of Iran's nuclear weaponization program.
This morning, Israel launching another round of airstrikes across Iran, taking out senior military leadership and damaging nuclear sites. President Donald Trump reportedly calling the action excellent. Our team coverage here at Bloomberg starts right now with Tyler Kendall in Washington, D.C., Jemana Basecci over in London. Jemana, we need to think about the Iranian response, and I think you nailed it earlier on in the program when you were thinking about ability and willingness of Iran and Iranian proxies to respond. What is their ability this morning?
Well, that's exactly it. They have tried to respond earlier today. They launched 100 drones that were fully intercepted by Israel, but they have vowed an even harsher response. And the way they could do it is twofold. They could go along the lines of the response that we saw last April, last October, launch ballistic missiles directed towards Israel. But as we know from last year's episodes, most of those, and pretty much all of them, were fully intercepted and caused very limited damage because of the Iron Dome, because of David's Arrow, because Israel actually have the capability to defend themselves from the types of ballistic missiles that Iran can fire. The other option is asymmetric, i.e. they could go down the route of perhaps shutting down the Strait of Hormuz. That is why you saw this instant reaction in the price of oil this morning. But the more the day passes on, the more experts are saying that they've actually never done this at any time in history. Even during the Iran-Iraq war, they never actually fully closed the Strait of Hormuz. They've caused disruption from time to time, because if they did do that, they would also be cutting off a key lifeline to the Iranian economy. Remember, most of the oil that gets exported out of Iran goes to their major buyer, that is China, and that passes through the Strait of Hormuz. So they would be self-inflicting a lot of pain if they decide to go down that route. The other option, of course, is to use their proxies in the region, but they are also operating in a severely diminished capacity. We talk about the regime change in Syria, Hezbollah in Lebanon, very much weakened, operating with much lower decision-making capability and also limited artillery. And then the Houthis as well, even though will have still been causing disruptions in the Red Sea, again, operating with a limited capacity to inflict pain. What the Iranian side have said is that they will retaliate somehow. They've even threatened to go as far as hitting potential U.S. assets as well. But what I will say, and this is to come back to what you and Annmarie were just citing too, this isn't just Israel haven't just targeted nuclear sites in Iran. They've also gone after key individuals and personnel. They've taken out more than 20 nuclear scientists. They've also taken out the head of the IRGC. That cannot be understated. They've taken out the chief of staff of the armed forces. And if you look at these individuals' histories, they single-handedly were responsible for the strikes on Israel last year. And also, let me rewind it back to those attacks on Saudi Arabia facilities at Aramco and Abqaiq in 2019. And so key masterminds of some of the regional conflagration in the last couple of years have been taken out with this strike. So they most definitely are operating from a weakened position now.
Tana, let's pick up on that point on the United States. Potential U.S. involvement. Secretary Rubio overnight distancing the U.S. from the actions of Israel on Iran. What's the president's position this morning?
Yeah, well, John, President Trump really does appear to be lending his support to these Israeli airstrikes, even as the U.S. says it is not involved in this operation. In a series of posts on Truth Social earlier today, President Trump touted American military might, suggested that more equipment could be flowing into Israel shortly, and made clear that the U.S.'s stance is that they want Iran to make a nuclear deal before it's, quote, too late. In a follow-up post, he said that he gave Iran a deadline, which they ultimately did not meet. Now, the U.S. did say it was informed of this attack beforehand, but President Trump suggested to reporters yesterday that he actually didn't want to see this strike because he didn't want to risk those ongoing nuclear talks. Now, the U.S. is, of course, also warning Iran that it should not retaliate against any U.S. interests or personnel in the region. Marco Rubio, the Secretary of State, as you were showing there, saying that that is the top priority of this White House at the moment. But, John, we could get more details later today. President Trump is expected to gather with his National Security Council here at the White House in the Situation Room at 11 a.m. Eastern.
Tyler, looking forward to your reporting on that. Tyler Kendall there alongside Jemana Pasecci, your team coverage here at Bloomberg. Let's get you the reaction and response on Wall Street with Darrell Cronk of Wells Fargo. Darrell, good morning.
Good morning, John.
It's good to see you, sir.
You too.
We were going to have a very different conversation to the one we're about to have.
That's fine.
Earlier on in the week,
you got to pivot sometimes, right?
CPI, PPI came in better than expected, and all of a sudden we reintroduce some inflationary risk to the conversation. What's your response to the action overnight?
Well, obviously, the response, I don't think should come as shocking, right? If you read the latest International Economic Atomic Association's report, they would tell you that, of course, the U.S. has met with Iran 5 times. They've taken their 60% uranium-enriched stockpile and increased it by 50% from February to May, right? In order to get weapons grade, you got to get to 90% enriched. It's maybe a couple weeks to do that, which is why there was such a sense of urgency around bringing this, action to the table. Obviously, the diplomats come out of the Middle East and the key areas, so you could kind of see this coming. And frankly, I think markets might have sniffed some of this out, right? I mean, so today the reactions are not what you would maybe see in big rally in the bond market. Dollar is a little stronger, right? But earlier this week, right, we had a huge rally. 10-year started this week at 451, down to 437. Gold's back above 3,400, right? Safe haven asset. The dollar up until today was weaker, right? 3-year low and had been continuing to trend lower. So this idea of kind of this quiet risk off of money into bonds, money out of dollar, and money into gold, right, was already afoot even before last night's action.
We had some better news earlier in the week. CPI was softer, PPI was softer. And if you're worried about the labour market, maybe there was going to be some space for the Federal Reserve to introduce some flexibility, perhaps even signal a response to that in the not too distant future. And now we've got to face the prospect of an easing bias that might be constrained. And perhaps the growth inflation mix starts to sour in the months ahead. Do you expect it will? And how much of a factor will this development play?
Well, this will play some factor in it, obviously, with the price of oil, right? Oil was a nice tailwind to bringing inflation down, especially as we hit the summer driving months and everything else. Now we just flip that on its back, right? And so I do think, if you're Chair Powell, you're grinding your teeth this morning and you're not very happy with this news, right? Because it gives you another Gordian knot to solve, right, in how you do this. I do think, what people fail to understand is, when you take their dual mandate, let's call it inflation and growth, it's not symmetrical, right? Inflation is the element that they're concerned about, right? And have to be, and it becoming unanchored and moving higher. We do believe, in fact, we walked into this year with our CPI for all of 2025 at 3.5%, which is considerably above the street, right? I think that's still going to come to us in the back half of the year. And frankly, in the portfolios, Two of our highest conviction ideas have been energy stocks, which have languished up until maybe today,
it's working this morning,
and commodities, right? And precious has done extraordinarily well. Now energy is going to come in with it, so that's actually helped our investors.
But the market is well supplied. How high do you think prices can go?
I don't think they get much higher than probably 80 to maybe 85 on another, sizable retaliation from Iran could drive you up into that.
When analysts say 130, what does that look like geopolitically?
I think, there's plenty of supply out there. The Saudis would come, OPEC Plus would come with more supply to try to temper or blunt any type of, huge geopolitical risk premium. Remember, at 75, right, we've come a long ways down in oil. Like, we were just talking about oil not so long ago at $58, $60 and saying, what's wrong with oil? And it's completely oversupplied. So at 74.5, we have to kind of put that into perspective. Right?
So making some money this morning on crude,
yes,
on some of the oil players, for not so great reasons, and making some money, I think more recently over the last several months, precious metals, gold, platinum,
yes,
what a run they've had. In equities at the moment, what's the play? What do you want to do at the index level? Which a lot of people just sit here and hold the S&P 500. They want to know what's going to happen with the market cap weighted S&P. What do you do with it?
So in the second half of this year, we think it's really important because we don't think the index goes a long ways higher or lower. Obviously, some churn of volatility. Under the surface, right? When you get under the surface, there's some real good money to be made if you're overweighting and picking the right sectors, right? To us, those continue to be infotech, right? We're favorable on infotech, comm services, on the, let's call it, growthy side, and on the value side, I already mentioned energy and financials, right? So you can kind of barbell that exposure. All of those, we think, when the dust settles on 12/31 of this year, all four of those sectors outperform the broad index, which just kind of churns here.
12/31 feels like a lifetime away,
It does
doesn't it?
feel.
Hey, let's get through June, Darrell. It's
All
good
right.
to see you.
Sounds good.
Thank you, sir. Let's go through today. Darrell Cronk of Wells Fargo. Let's get you an update on stories elsewhere with your Bloomberg brief, with your top stories worldwide. Here's Yahara Anand. Hey, Yahara.
Exactly, John. Israel launched another round of attacks on several locations in Iran, including the Natanz nuclear site. According to the Tasnim news agency, the Tabriz airport was also under heavy attack earlier, with thick black smoke rising from the area. Meanwhile, President Trump reportedly spoke with ABC about the strike, saying, quote, "I think it's been excellent and there's more to come." Meanwhile, gold is spiking, fueled by haven demand from investors after those attacks in the Middle East. The move higher extends a two-day gain. Gold has been a star this year, rallying 30% as investors look for hedges against the Trump administration's trade policies and geopolitical tensions. And authorities in India have begun the investigation into yesterday's plane crash that killed over 260 people. India's aviation minister confirming that one of the plane's two black boxes, which of course contained critical details on the events of the flight, has now been found. That's your Bloomberg brief. John?
Yahara, thank you. Appreciate it. More from Yahara later in the hour. Up next on the programme, the morning calls, plus the Israeli ambassador to the UN, Danon, joins us next. Live from New York City this morning. Good morning to you all. The opening bell, 1 hour and 16 minutes away. Equity futures down about 1%. Live from New York City this morning. Good morning to you all. The opening bell about 1 hour and 13 minutes away. Equity futures coming into that, recovering slowly. Equity futures still down about 1% on the S&P. Similar move on the Nasdaq 100. We're down by 1.2%. That's the price action. Let's get you some morning calls. Your first call from Roth Capital, raising its price target on AMD to 150, saying it's encouraged by the company's AI portfolio. That stock is down by 1.5%. Your second call from Argus, downgrading McDonald's to hold, expecting traffic to remain weak as consumers push back against price hikes. That stock is down by 0.7%. And finally, JP Morgan raising its price target on Ross Stores to 154, highlighting opportunities in marketing and store experience. Ross Stores this morning just about unchanged. Let's turn back to our top story worldwide. Israel launching another round of attacks on several locations in Iran. President Trump reportedly telling ABC, quote, "I think it's been excellent and there's more to come." Joining us now to discuss is Danon, the Israeli ambassador to the United Nations. Ambassador, good morning.
Thank you for having me, Jonathan.
Thank you for sharing some of your time with us, because I'm sure you've been exceptionally busy. Let's just talk about where things stand right now. Is this operation ongoing? And ultimately, what are the goals?
Well, the goals are very clear. We want to make sure that Iran will not pose a threat not only against Israel, but against the entire Western civilization. And specifically, we have two main goals: to eliminate the nuclear capabilities and to stop the production of ballistic missiles. And let me elaborate on that. You know, it's not only the nuclear weapons. We all know about the uranium enrichment and about that they're getting very close to put a bomb together. But look at what they're doing with the ballistic missiles. They wanted to be at the same level of the US and Russia in terms of the quantity and the technology of the ballistic missiles. We couldn't allow it to happen. We got intel about their intentions to create another attack against Israel. You know, we all remember what happened on October 7th, but this time they wanted to use thousands of ballistic missiles and invade into Israel with their proxies. So it was a preemptive attack. So we will continue until we will be sure that we eliminated those two capabilities.
How sure are you right now?
Well, we will have to wait and see the result of the attack of last night. It was a major attack. More than 200 aircrafts participated in the attack. Many targets, many senior military officials were eliminated last night. And we will continue until we will know that Iran is in the point that they cannot continue with their efforts.
Including the IRGC general commander. Is there an intent for regime change in Iran from Israel?
Well, that's not our goal. You know, we are concerned about the threats to Israel. For the Iranian people, I wish they would have a different regime. You know, we saw what happened in Iran. The people are suffering there. They have no heat in the winter, no AC in the summer. They are suffering there. But our goal is to eliminate the capabilities of Iran so they will not be able to threaten us. And Annmarie, look at the map. We have no border with Iran. It takes us hours to fly there in order to attack those facilities, but still they spend billions of dollars to create threats against Israel.
This nuclear enrichment is deep into the mountains. How long will that victory actually take? And it's called Rising Lion. Why is that?
Well, you know, every time we pick a name when we have a military operation, sometimes the computer is doing it for us. So there is no real meaning for the word of the operation. But I would say that IAEA published recently that Iran has enough uranium to create not only one bomb, multiple bombs. So it was a matter of days to put it together. We decided not to wait, not to take that risk. We believed the threat of the Iranian. When they said that they're going to use those ballistic missiles to destroy Israel, we took it very seriously.
How much did the Israeli government brief the U.S. government?
So we talked with the U.S., but this decision was decided in Jerusalem. And we took that decision independently, not for the first time. In the 80s, I want to remind you, we attacked the nuclear reactor in Iraq. We took the decision by ourselves when we attacked the reactor in Syria. I think it will serve the U.S. and other Western democracies, but it was a decision that was made in Israel.
Do you think the United States will come to not just the Israeli defense, but potentially if you're needing help with more attacks, if this continues for days and weeks?
Well, since the day Israel was established, we never asked the U.S. to fight for us. We know how to fight, and we know how to defeat our enemies. You know, we have heard threats that the Iranians are threatening the U.S. Targets. They are threatening the allies of the U.S.
And you're closing your embassy, right?
So we take precautions in different places around the world. We are aware of the threats, but we will continue. Also in Israel, we have to be honest. You know, in Israel today, we are getting ready for serious attacks coming from Iran. It will be very intense in Israel in the next few days. We are preparing the population. And this operation, it's not only about the bravery of the pilots, it's about the population in Israel. They will have to follow the guidelines in order to avoid casualties.
Ambassador, as you know, the United States has distanced themselves from this in the last 24 hours and said they weren't part of the attack. What's not clear to us is whether they assisted in the defense of Israel. Did they?
Well, you know, we have capabilities, and we are...
You did, but did they assist you when they sent over drones from Iran to Israel? Did you receive any help from partners outside of Israel?
Well, as far as I know, that we were able to deal with the drones by ourselves. But we have to realize, you know, the threat is not only against Israel. As I said earlier, Iran is threatening the allies of the U.S. in the Gulf. So we have the capabilities. I'm not sure they have the same capabilities.
Are you worried about an asymmetrical response from Iran?
Well, we took into consideration that there will be retaliation, Annmarie.
Will it be proportional?
well, they know that we have capabilities as well. So they will have to think, twice before they attack us and what they are doing. And I would say that today we can reach every target in Iran. We have the control in terms of our pilots.
Do you have intent to reach every target?
Well, we have the capability. We focused on the goal that I mentioned earlier, the ballistic missile infrastructure and the nuclear facilities.
How long will that take if you were to reach every target?
Well, it's not going to be a short operation. And it will
so is it weeks or months?
No, I wouldn't say months, but it can take days or weeks.
How lonely is Israel at the United Nations at the moment?
Well, I will let you know in a few minutes when I go there, Jonathan, but it's going to be tough for us. Iran already called for the Security Council to meet. Probably it will happen this afternoon. But, I will tell my colleagues at the UN, where were you in the last 10 years when Iran threatened Israel? Where were you when they sent ballistic missiles? Where were you when they actually acquired the nuclear capabilities? So, words will not stop Iran. Israel will.
The international response, Saudi Arabia calling it heinous, the NATO Secretary General calling for de-escalation, the UN Secretary General calling for maximum restraint. Do you think there is a diplomatic route when it comes to dealing with this regime?
Well, I think that, always you have the diplomatic act, and the time for that will come. But we saw that the diplomacy didn't convince Iran to change course. For decades they negotiated, they played the game, they lied. We had the intel that they are developing nuclear capabilities for military usage.
There's some analysis, though, that under the JCPOA, they were restrained, they were capped. They are not capped now when it comes to enrichment.
Well, with and without the JCPOA, they were continuing. And what we revealed only recently, that, alongside the reactors and the plan that was supervised by the international community, they developed a military capability that they were hiding it from the international community. So once we realized that they are going to that direction, we decided to stop that.
Ambassador, we appreciate your time this morning. Thanks for making time for us.
Thank you very much.
I'm sure you're going to have an exceptionally busy day ahead of you. So thank you, sir. The Israeli ambassador to the UN, Danon, there on the latest attacks on Iran overnight. Attacks that are continuing. The
attacks are continuing, and according to the ambassador, who is lovely to spend some time with us this morning, going to go over to the United Nations, saying, Jonathan, this will go on for weeks, not months, but weeks. And I think he was insinuating there that Israel's acting alone right now, but would expect the partners like the United States to help with defense.
We'll see. Crude at the moment up by more than 8%, 7.6% move on Brent crude, 74.62. The opening bell about 60 minutes away. We'll get into the economic picture in just a moment with Greg Daco of EY as inflation worries resurface. Live from New York City this morning. Good morning. The opening bell 60 minutes away, and going into that opening bell, equity futures recovering just a touch. We're down by 0.9% on the S&P, down by more than 1 full percentage point on the Nasdaq 100. So far this week, so good for the bond market. Yields lower at the long end of the curve on 10s and 30s off the back of 2 decent auctions on those maturities. And then inflation data, both CPI and PPI, coming in softer than expected. 435.53 is where the 10-year is. Unchanged at the moment, but there's a lot of tension in that bond market. On the one side, you've got the risk aversion. On the other, the inflationary development in the commodity market. Crude, WTI and Brent shaping up as follows. Big rally today, up by 7.5% on Brent, 74.50. On WTI, up 8%, 73.53. Inflation worries resurfacing just a little bit going into the Federal Reserve's meeting next week. Bloomberg's Mike McKee joins us now with more. Good morning, Mike.
Good morning, John. Well, you can file this under last thing we needed at the Federal Reserve. They've got a lot of uncertainty going on, and now it's even greater. It maybe just pushes back on the idea that the Fed will be cutting rates at all this year, depending on what happens. You have to go back to the 1970s when the Arthur Burns Fed was cutting interest rates because of inflation at the time brought about by the oil embargoes. And that touched off the great inflation that ended with Paul Volcker raising interest rates to almost 20%. By 2004, Ben Bernanke was saying the Fed knew that they had made a policy mistake at that point. He pointed out that monetary policy cannot offset the recessionary and inflationary effects of increased oil prices at the same time. And that's the situation we have right now. The Fed already facing that with the tariff regime from the president, and now with oil prices going up, that would have the simultaneous effect of bringing up inflation and perhaps slowing growth. So it'll be interesting to read the minutes after this meeting, but the Fed is going to look through this for the time being and wait and see how long this lasts, the elevated oil prices, and what the ultimate effect of tariffs are going to be. Hold on, you're not going to get any decisions from the Fed for a while.
Yeah, Mike McKee, I think if they had a choice, they might skip this one, skip the next one, maybe get to Jackson Hole and think about having a conversation. Mike, they can't do that. In fact, next week, as you know, they've got to put out some forecasts. It just feels like it's getting harder and harder to put out forecasts. What are the updates going to look like next week?
They probably won't change very much because when you don't know what's going on, there's no reason to change one way or another. That applies to the monetary policy as well as the forecast. So I would expect them to maybe raise the inflation forecast a little bit because of the tariffs, but not necessarily because of oil prices. And whether they do 2 or 1 dots is really irrelevant at this point because the Fed doesn't know what's going to happen. And so whatever they say is going to be kind of irrelevant in a week or so.
Can't wait for your coverage of that. Irrelevant meeting a week away. Mike McKee, thank you, sir. To extend that conversation, joining us around the table, Greg Daco of EY. Greg, good morning.
Good morning.
Starting points matter. So before we get into the inflationary story in the commodity market this morning, let's talk about where we are and what the trend is at the moment. For inflation, CPI and PPI coming in softer than expected this week. How are things shaping up for you?
Well, I think one thing that we know for sure is that we had strong disinflationary current entering the year. And this is something that a lot of observers were dismissing. We had this strong disinflationary current. We're now at the inflection point. We're going to start to see stronger inflation as a result of the tariffs feeding through. And I think the other part that people are overlooking, because on the surface things look okay, is the fact that the labor market is softening. And that's been the key pillar to consumer spending activity. As that softens, you're going to see more weakness in income growth, and in turn, that's going to lead to more softness in consumer spending.
Does that erode the potential for second-round effects if the labour market's starting to loosen up?
Absolutely. I think the key thing that people are missing is that tariff shocks are not necessarily going to have a persistent inflationary effect in an environment where the labour market is soft, because you're not going to get that pass-through onto wages, which is what happened right after COVID, where you had strong labour demand that was facing short labour supply. And that led to inflationary second-round effects from the wage growth side of the picture. You're not going to get that this time around.
This, as you know, is the Governor Waller argument. And I wonder how many people on the FOMC share the Governor Waller argument. And if they do, is the chairman willing to come out next week and just present it as the base case of the Federal Reserve, that perhaps this is something we should look through and we've got to acknowledge the developments, the adverse developments that are taking place in the labour market?
I think what's very important from the Fed's perspective in this environment is the ability to develop scenarios. We have not seen that. We should see more of that. Right now, when we're talking about the median forecast, it's really a mishmash of a lot of different forecasts and a lot of different underlying assumptions. We have to have a clear view as to what the underlying assumptions are for different policymakers' assumptions, and in turn, what they expect those assumptions will have in terms of their effect on economic activity. In this environment that is highly volatile, where you have tariffs, where you now have the potential risk of higher oil prices, higher financial market volatility, tightening financial conditions, it's very difficult to gauge what the outlook is going to be under different circumstances, and as a result, what the Fed's reaction function is going to be.
Greg, this morning, Terry Haynes says markets shouldn't assume today is another dot in a geopolitical dot plot. This event or incident isn't either of those where risk spikes and settles quickly. If that's the case, how high could we see oil, and how long could it sustain that price?
Well, I think one thing that I remembered from the recent interview from the ambassador was this notion that this could last for weeks. And this is very important. The duration of any shock is very important. Just like with tariffs, these types of oil price shocks are important in terms of their duration. We've looked at 3 different scenarios with our geopolitical team. One is a contained scenario, one is a moderate escalation, and one is a severe escalation. We've gone from the contained closer to the severe escalation scenario, where prices could accelerate and surpass $100 per barrel. What that does is 2 things. One, it leads to severe demand erosion on top of the inflationary effect from tariffs. 2, it creates increased financial market volatility. And 3, it leads to a tightening of financial conditions with downward pressure on equity prices and upward pressure on the US dollar. That is something that could be a catalyst for an acceleration in the global growth slowdown that is already underway and lead to potential recession risks across the world.
What does the Fed do with that? Because it was optimistic that, at least the market was optimistic, that energy was coming down. That was going to help bring down inflation. Well, what if you have north of $100 a barrel oil for quite some time?
I think the Fed sits on its hands for longer. Policymakers have said and repeated, and Fed Chair Powell has said and repeated, they do not want to preempt the effects of all of these developments, whether it's the administration policy shifts or, in this environment, a geopolitical conflict. They do not want to preempt the effect on the economy, so they wait and sit. And they're likely to do so, especially in a stagflationary environment. We're going to see in the projections next week that you're going to have more of a stagflationary feel to the projections, lower growth and higher inflation. That's really a headache for any central banker. And in that type of environment, they're likely to wait and see.
One piece of the SEP puzzle missing. You gave me the inflation, you gave me the growth. Where's the median dot for the Federal Reserve and the Fed funds rate?
The median dot really doesn't matter that much, to be honest, John. If you don't know what the underlying assumptions are for economic activity, the median dot does not make much sense at all. So I still think we remain with this view of 2 rate cuts by the end of this year as the median dot plot, and then another 2 in 2026. But those dots don't really make much sense, if any, in an environment where you have so much uncertainty as to the economic landscape and you have no idea as to what each member of the FOMC is anticipating on the economic front.
And yet somehow we will infer the reaction function of the Federal Reserve through the median dot on Fed funds. And that's the issue that I think we've all got going into this. If we get the stagflationary backdrop that might develop, and I stress might, we need to be very open-minded about what happens down the road, and I know you are too. We want to understand which side of the mandate the Fed might bias. If the dual mandate is in conflict, do you have any idea on which side they would put more weight on?
I think given where we're starting from, an environment where inflation is not yet at the target, but where employment is arguably close to full employment, it will lean towards the inflation side of the mandate and be careful not to essentially ease too rapidly in an environment where there are upside risks to inflation that could be more persistent. I've been arguing that the second round effects won't materialize. But when you start to add different sources of inflationary shocks, from higher traded goods to higher oil prices, then you can start to have a longer and more persistent shock to inflation, which would argue for the Fed not easing excessively and maintaining a slightly restrictive monetary policy stance. So I think that's really where we are right now in this environment where the 2 mandates are not met, they're not equally weighed, and as a result, the Fed will likely lean, or at least a number of policymakers will likely lean towards the inflation side and protect the risk of a reacceleration in inflation.
So next week, it's statement, forecast, news conference. In the statement, words matter. In the forecast, numbers matter or not, depending on how you view that statement and how you view those forecasts. In the news conference, I always say that emphasis matters.
Yes.
Where do you think the chairman's going to put the emphasis in the news conference next week?
I think he'll put the emphasis on the fact that uncertainty has risen, that upside risks to both the unemployment and inflation have risen, and I would expect he will be questioned on the staff's latest forecast. If you read the minutes attentively, you'll see that the staff is essentially putting equal weights to a baseline scenario that has a recession versus a baseline scenario that does not have recession. That is not good news because, generally speaking, these staff forecasts move up to the policymakers and become part of the conversation. If we have this equal weight, I would expect Fed Chair Powell to have to answer this question as to how high the risks of a recession are.
Greg Daco of EY. Greg, it's good to see you, sir.
Always a pleasure.
Setting things up about where we are right now going into that Federal Reserve meeting next week, and where we are matters. We had an improvement this week on CPI and PPI, and we seem to just on the margin upend that with the conversation in the Middle East this morning.
And what Greg is talking about when it comes to oil prices, what he sees right now playing out in the region is a more severe reaction, which means potentially, especially what the ambassador told us, this is going to be a week's operation as they go after these nuclear facilities. You can see oil push towards 100. Yesterday, at the White House, the president needling his energy secretary sitting in the front row, Chris Wright, saying, you're going to make sure we keep oil prices down, right? You're going to make sure we keep oil prices down. This is a picture that the president does not want to see.
Pushing deeper into the 70s, 74.80 on Brent, 73.83 on WTI, up by 7.8% and 8.5% respectively on those two contracts at the moment. Let's give you an update on stories elsewhere, your top stories worldwide with your Bloomberg Brief. Here's Yahara. Hey, Yahara.
Hi, John. President Donald Trump is urging Iran to accept a nuclear deal to avoid further attacks, posting on Truth Social that there is still time to make the slaughter come to an end. He added that the next already planned attacks will be even more brutal. CNN reporting Trump is set to speak with Israeli Prime Minister Benjamin Netanyahu today. Meanwhile, the Trump administration winning a brief reprieve from a judge's order to pull back its use of troops in Los Angeles. Protesters against deportation raids have clashed with law enforcement in downtown LA for days, with California Governor Gavin Newsom and President Trump at odds over how to restore order. Another hearing on the case has been scheduled for Tuesday. And a check on U.S. steel shares. They are down more than 3% in the pre-market after Japanese media reported that Nippon Steel's planned acquisition of the company could be at risk. The report suggests the deal may not go forward if Nippon is not granted sufficient freedom to manage the company independently. Nippon continues to push that U.S. Steel becomes wholly owned. That's your Bloomberg Brief. John?
Yahara, thank you. Thanks for this morning. Have a nice weekend. Up next on the programme, we'll set you up for the day ahead, the week ahead. We'll be catching up with Vishal Khanduja of Morgan Stanley as investors back out of equities and look at crude pushing a whole lot higher. Live from New York, this is Bloomberg. The opening bounce about 44 minutes away. Going into that, here's the state of play. Cross-asset equities at the moment on the S&P, negative by 0.9%. Slowly recovering through the morning, though, and well off session lows. We're down by 1.2% on the Nasdaq 100. If you turn to the bond market, we're talking about this flight to safety, not to treasuries. 2-year, 10-year, 30-year, basically unchanged. And at the margin, yields a little bit higher at the front end of the curve by a single basis point, 392.24. All the economists and fixed income strategists we've spoken to so far this morning focused on the risk of reintroducing an inflation risk. And that comes from the commodity market. Check out WTI, check out Brent. Brent up by about 8%, up by 8.6% on WTI. This is a picture, Annmarie, that won't be music to the ears of President Donald Trump, who's enjoyed this decline in crude. This decline in crude has completely U-turned over the last week.
And as I just said, yesterday he was needling Chris Wright, his energy secretary, to say you're going to keep prices down, right? We have to keep prices down. Well, this is a backdrop that is going to mean potentially prices going as high as $135 a barrel when you look at what JP Morgan said recently in the worst case scenarios in the Middle East. What's happening in the Middle East right now is the strikes continue, and this is a region that's responsible for a third of global oil production. And that is why you see the geopolitical risk premium into the price.
Might not be a one-off shock either. We caught up with the Israeli ambassador to the United Nations, who said to Annmarie, this could take weeks. And if it does take weeks, next week's Federal Reserve meeting just got a little bit more interesting, didn't it? Let's get you some single name price action, some morning movers. Let's catch up with Danny Berger. Hey, Danny.
John, we're also getting the geopolitical risk premium priced into individual stocks. It is the energy sector that is outperforming the most in this pre-market session so far, with just some 30 minutes ago until the open. ConocoPhillips, ExxonMobil, Chevron, all some of the top gainers in the pre-market session, up 4.5% for the biggest winner, ConocoPhillips, this morning, again, alongside that move in oil prices. Another typical type industry we see gain when you have geopolitical strife is also defense contractors. That's happening in the U.S. too in the pre-market. RTX, Lockheed Martin, all up at least 3%. Also questions around the U.S. involvement and future involvement in this, of the U.S. contractors trading on that. Finally, to the downside, though, as the conflict unfolds, as oil prices and likely fuel prices go higher, is airlines. Those are all falling. United, Delta, American Air, all down at least 4.8% this morning. We've also seen airspace close in various Middle East regions, although that most likely hits the Asian and Middle Eastern airlines, but still getting a big reaction here stateside, John.
Danny, appreciate it. Have a great weekend. Thanks for catching up with us. Danny Berger there on the single names, the morning movers into the opening bell. As we count you down to the opening bell, here's a flavour, a snapshot of the trading diary into the weekend and into next week. A few more items to get through this Friday morning. At 10 a.m. Eastern Time, UMich sentiment. At 11 a.m, President Trump attending a National Security Council meeting. Looking ahead to next week, Tuesday, retail sales. Wednesday, jobless claims, plus a Federal Reserve rate decision and Chairman Powell news conference. Claims are on Wednesday, not Thursday, because on Thursday, US markets are closed for the federal Juneteenth holiday. Elsewhere, going into this opening bell, investors very preoccupied with developments and headlines out of the Middle East. Joining us now is Morgan Stanley's Vishal Khanduja. Vishal, welcome back to the programme, sir. Got to talk about fixed income. Before we get to the latest developments, let's just sit on developments in the commodity market and the bond market, not just in the last 24 hours, but the last few months. It just feels like over the last few days, Treasury's just started to do something good. Yields started to drop. CPI, PPI came in lower than expected. Vishal, starting points matter. Has the bond market started to show some real signs of recovery?
From the fundamental side, yes. We had built in quite a bit of concessions. 530s had steepened out, probably in that mid-80s after touching the 100. Yield levels, 450 on the 10s, closing on 5% on the 30s, had created enough sort of concession for the 10s and 30s, the big auctions, duration auctions that went through. Again, just a reminder, we are issuing probably $1 trillion of treasuries every quarter here. So quite a bit of duration that gets issued. And then you had CPI and PPI below expectations. We've pushed out a little bit of that uncertainty coming from the tariff side or whether the inflation is going to show up from those 2 months. I think all of that was reflected in lower volatility, as well as slightly lower yields or slightly more demand coming out at those levels, and then spreads reacting to that if you will. So quite a bit of calm, if you will, prior to the overnight actions that we've seen on geopolitical issues.
And Vishal, then we've got the overnight actions, and then we've got this rally in crude, up by 8% on Brent, on WTI. Does it upend some of the more positive developments that you just outlined?
Definitely it does. I think, Jonathan, what it does is if you look at the price action, very clearly it shows the reluctance of that 20 and 30-year bonds to behave as a risk hedge that it was probably for 4 decades that we've seen in the bond markets. The front end is more reactionary to the Fed. We have probably about 13 meetings from now until end of 2026. We are pricing in probably around 4 cuts approximately. Maybe we will probably be around that 2 to 4 cuts. I think next week we might hear that they're pushing back another dot of their cut basically to 2026, which we think is probably fair value in the front end. But very clearly, I think the back end is struggling to see that demand, whether it's the risk hedge demand or it's that income demand that typically shows up in the back end of the yield curve, which is very clear from that overnight action as well that we've seen.
Vishal, if oil prices stay elevated, how can there be 4 cuts this year?
Not this year, but probably, I think as demand destruction comes in, higher prices should bring in slight more demand destruction in the back end, whether it's related to tariffs, whether it's related to a very draconian tail risk scenario that this becomes a protracted issue, a geopolitical issue, which has that sort of 3-figure dollar price on Brent crude. I think that you should see a global demand sort of taper down for the commodity in that type of a scenario. You could see in the next probably 18 months, probably 2 to 4 cuts then showing up, at least the market pricing that in as a modal risk rather than actual outcome from the Fed.
So Vishal, what I hear from you is a degree of confidence in the front end of the yield curve, providing some form of negative correlation to risk. What I don't hear is the same degree of confidence about the long end. And I wonder, putting those 2 things together, what that means for your approach to taking corporate credit risk at the moment.
I think this becomes a pretty fantastic spot for corporate credit risk. Now, the only issue is that probably spreads in corporate risk have probably front-run the macro developments, that inflation is not spiking higher, growth is lower, but we are not going into a recession. And the Fed is ready to act if need be, even though they might be slightly stuck here, but stuck here for good reasons, that they don't see pretty significant sort of risk to their dual mandate, whether it's a labor market or it's inflation on the other side. So I think it becomes almost like a fantastic Goldilocks type of environment. I know I'm going to be brutally scrutinized for using that word on your show, but I think it becomes a fantastic environment for credit risk assets, and that's how they've been behaving. Lower growth, not huge spikes in inflation. Fed has still 450 basis points in their toolkit to go. So lower growth is not bad for credit risk, especially at the starting points of yield levels and then starting points and fundamentals of how balance sheets are behaving at this point.
It just doesn't feel very Goldilocks at the moment this morning, that's for sure. Vishal, appreciate your time, sir. Thank you. Vishal Khanduja there of Morgan Stanley on fixed income. Just an update on the crude market. Oil is higher. Obviously, you've seen that play out through most of this morning. We're up by 8%. Moments ago, this from OPEC. The Secretary General of the Organisation of the Petroleum Exporting Countries affirms that there are currently no developments in supply or market dynamics that warrant unnecessary measures.
That's pretty surprising, given the fact that you have oil up close to 8% this morning, and it has been sustaining this rally throughout the entire night as Israel continues to strike on Iran. The OPEC is saying, basically, we are not going to come in and fill barrels. But also, you have to remember, OPEC can change its mind. This is their current statement, but this is, I would say, pretty bullish for the price. The fact that OPEC is saying we're not stepping in.
That's the latest on OPEC. Here's the latest from the White House. The president holding a National Security Council meeting later on this morning. Also expected to speak with the Israeli leader. Tyler Kendall joins us now for more from the White House. Tyler, what are you hearing?
Yeah, hey, John. Well, it does appear that these two leaders will hold a phone call later today. It is our understanding that they've actually been in pretty close contact in the last few days leading up to these Israeli airstrikes, as the U.S. has confirmed it had notice ahead of time, though contends that it is not part of the current ongoing operation. Now, it's going to be the big question here moving forward. What is U.S. involvement actually going to look like? As Israel's ambassador to the UN told you both earlier on the program that they are preparing for significant retaliation from Iran. And he also suggested that as of now, the U.S. has not assisted in its defense response. So we're going to have to wait and see, as it does appear clear that President Trump is lending his support in a pretty big way to these ongoing strikes. As you well know, in his post earlier this morning, he really touted American military might and also suggested that more equipment could be flowing into Israel shortly.
Tyler Kendall with the latest. Tyler, looking forward to your reporting. Thank you. Annmarie, just to wrap it up and walk away from the studio, it felt like it was targeted. It might be limited. Now there's questions about whether that would be the case. It felt like maybe the strikes were a one-off just to the last 24 hours, and we're finding out this morning this could take weeks, maybe longer.
The Israeli ambassador to the UN telling us right here in the studio this is going to be days and weeks, and they're going after every single nuclear facility.
Conversation continues into the weekend. Following up on things on Monday, Kelsey Barrow of JP Morgan, Dan Skelly of Morgan Stanley, Cameron Dawson of New Edge Wealth, and Jonathan Pingle of UBS. From all of us here at Bloomberg Surveillance, thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.